2%, the 2-year 3.94%, spot gold up 1.1%, 33.24 the ounce, and Bitcoin now just below $107,000, down 0.4%. Revised government data show America's economy contracted at a slower pace than initially estimated during the first quarter. And with more, here's Bloomberg's Vinny Del Giudice.
Gross domestic product sank at a 0.2% pace at the start of the year, the first loss in 3 years. Blame it on weaker consumer spending and the impact of White House tariffs on trade. GDP figures are revised multiple times as more data become available, enabling government analysts to fine-tune their estimate. The Commerce Department initially reported a slightly sharper 0.3% drop. Vinny Del Giudice, Bloomberg Radio.
United Airlines and JetBlue have agreed to a far-reaching partnership that will allow travelers to use loyalty points and book flights across the two carriers. The agreement fulfills United CEO Scott Kirby's desire to secure flights at JFK at a time when air traffic control problems are hampering operations at Newark, which is the carrier's primary connection to the crucial New York market. Right now, we have got JetBlue shares trading lower, down 2.2%. Shares of UAL, parent of United, up by 1.5%. So recapping, stocks higher, S&P up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Here he is in New York, Joe Matthew.
All right, Charlie, great to see you in New York, and welcome to the fastest show in politics here on Bloomberg Radio. Satellite radio, channel 121. On YouTube, search Bloomberg Business News Live. I see you on YouTube, as well as Bloomberg Originals. You can't hide from this program now with breaking news every day at high noon. It never seems to fail. With headlines crossing the terminal now on tariffs once again, it appears we have a second judge. This is just now emerging. A second judge blocking some of President Trump's tariffs in a small business case. We're going to drill down on exactly what this is. A Washington federal judge pausing this tariff order for 14 days. Producer James is running this one through the mill because we already have a very important ruling that we've been talking about here, move the markets. A court you likely never heard of until 7 o'clock last night. The U.S. Court of International Trade, right around 7 p.m., striking down President Trump's tariffs, the majority of them at least. And we know that the White House is going to try to get this order stayed so the tariffs will remain in place. Now that we have another judge here, a whole other case, this could become a bit more murky. Now, there are a few things that I want to point to. One of them is the White House press briefing that is scheduled to begin a little more than 15 minutes from right now. Press Secretary Caroline Leavitt will be holding forth in the briefing room, and surely we'll be talking about this and taking a lot of questions on it as well. We also have a 5 p.m. Oval Office swearing in for a new chief of protocol. At the moment, this is not open press, but it would be the moment if President Trump wants to say something about tariffs, about the taco trade, or anything else at that moment if they decide to bring the press bull in the room. So just keep those in your pocket. As we learn more about them, we'll let you know. Maybe this is a great time for Elon Musk to leave the building, because tomorrow is the last day. And by the way, it's interesting. There are stories everywhere today about how Elon is finally saying goodbye to Washington, and that somehow this was the week. If you listen to or watch this program, you've been seeing this coming. We told you it was a 130-day contract, if you will, unless the president decided to renew him, and that would, well, bring us to tomorrow. We also know that Elon Musk is getting back to things at Tesla and SpaceX. He's been clear about that with his investors. And if you were with us the day he spoke to the cabinet meeting, it sure sounded like a farewell a couple of weeks ago. Elon Musk holding a series of interviews as he tries to rehabilitate the message, the image, I should say, and send a message to investors that he's paying attention to the companies. Musk exits Doge, as I read on the terminal, leaving threadbare agencies and strained workers. And that's where we start with our political panel. They're both with us today. Bloomberg Politics contributor Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress, and Bloomberg Politics contributor Rick Davis, Republican strategist and partner at Stone Court Capital. How's this all hitting you, Rick? It's an interesting moment to watch Elon Musk leave the building with, dare I say, not a lot to show for it. What do we have to show for the Doge experiment after 130 days?
Yeah, he's packing up the chainsaw, and I think it's already headed west. So goodbye, Elon, from the government to you. It's hard to tell. I think that the jury's going to be out for a while. I mean, you know, he was supposed to cut $1 trillion in spending. Latest analysis is less than 175 billion. A lot of that may be duplicative. He was supposed to cut jobs, 58,000 jobs cut, but a lot of those are under various legal appeals. 28 lawsuits filed as a result of Doge actions based on the New York Times. So he's definitely helping out a lot of lawyers who needed work defending government agencies. And I would say the one thing that probably he carries with him, and the rest is left in Washington, is a significantly worse approval rating than when he showed up in town. Remember, Elon Musk was a bit of a cult figure before he took on the Doge. And a lot of people thought he was really going to change Washington and had the approval rating to prove it. But he has taken a nosedive from a political perspective and is now one of the most unliked officials associated with the Trump organization, the Trump administration. So I would say if there's a sort of loser in the Doge experience, it's been Elon Musk's approval rating.
Well, I'm just looking at this video. CC, never stop playing the chainsaw video. And something tells me that that's going to be around for a moment. The best of CPAC. If you're with us on YouTube, Bloomberg Originals, you see what I'm talking about here. We've got a headline I have to mention. That's the way it goes, right? At noontime in Washington, the Fed just told us that Chair Jay Powell met with President Trump today at the White House. Powell and Trump discussed growth, employment, and inflation. Those would be the topics, and I suspect we're going to hear a lot more about this forthcoming and included in that press briefing that starts 10 minutes from now. Jeannie, Elon Musk, and I guess this is one reason why everybody's talking about it, he put a post on X thanking President Trump for the opportunity to reduce wasteful spending. And he said, Doge's mission, this is a quote, the mission will only strengthen over time. Do you believe that?
It's, you know, what was fascinating about what he had to say was he seemed to compare himself to the Buddha, because he said Doge is like Buddhism, meaning that it could survive without Elon Musk. So there you go. I guess he is the next Buddha. I'm not so certain it's going to survive, particularly in the way he imagined. But in addition to his talking about Buddhism and himself as Buddha, he also has some really fascinating quotes about how stunned he was that things are much worse in Washington than he imagined, and what an uphill battle it would be to improve things in DC. And, you know, you sort of scratch your head and wonder, what world was he living in? I keep thinking he's really got to go see Hamilton again if he didn't see it the first time. He is exactly where Alexander Hamilton finds himself in Act Two. Frustrated with Jefferson, and Washington pulls him aside and says, listen, you're going to have to negotiate compromise and get legislation passed, which is the only way to make Madisonian government work. Yeah. And of course, Elon Musk is not used to that. He is something of a individual contributor at the top, if you will. So apparently DC is not for him, but like the Buddha, he is going to move aside and hope that the Doge continues on its way.
I thought Trump was the Buddha. What's going on around here? We only have one
There's
Buddha.
There's two now, Joe.
Rick, what happens to the Doge caucus? All these lawmakers signed up to be part of a movement, I thought.
Yeah, my bet is they don't have a lot of public meetings in the future. Maybe midnight in a barn in West Virginia, talk about cutting government spending. But the reality is, this was such a big impact early, right? I mean, like, we haven't really seen anything like Doge in a long time come in, have a major impact in the way government was functioning, basically stripping away authority from cabinet secretaries and Congress. So, you know, it's had an enormous impact in the first, 4 months of this administration. So it doesn't go without some consideration and frankly, some learning, because in future administrations that think about this kind of thing, they'll try to think in terms of what was positive about it and what was negative. My guess is the remaining Doge caucus, the congressional folks, will look at this as a way of saying, look, we've already seen reporting that people are talking about, well, we want to improve the computer and technology that exists within the federal government. We got to make it more efficient, more updated, better protected. And if that happens long term, that will be considered a good improvement in where the government is today. Most people pay no attention to it, but when you hire a bunch of programmers to come in and change Washington, you hope at least that part of it does change.
Getting some more headlines on this meeting today at the White House, apparently between President Trump and Jay Powell. If you're just joining us, we're just learning about it. Powell and Trump sat down at the White House to talk about growth, employment, and inflation. The Fed says Powell stressed a policy path that depends on incoming data and outlook, a data-dependent Fed. Not unusual to hear about that, as we also wait for daily news on tariffs. But Powell also said the Fed will set policy solely on objective analysis. Jeannie, it sounds to me like the back and forth on tariffs, for instance, and maybe suggestions of growth that are not acknowledged by the CBO are not going to be acknowledged by the Fed either. How do you read that?
Yeah, I mean, it sounds like it. Hearing people in DC today talk about making decisions based solely on objective data is music to my ears. I have to confess that, Joe. I wish we had a lot more of that, so it's welcome. I also wish for all the TV and cameras in the White House these days, we could get one in there when Powell and Trump are speaking. That's got to be fascinating. Yeah. But, I do think Donald Trump has to be very frustrated given what the court decided on tariffs today. In some ways, though, what it sounds like is this conversation, what the court decided, are some gifts to Donald Trump to get him back on track, focusing on what he should be focusing on, which is not attacking Harvard and not taking jets from Qatar, but focusing on inflation and focusing on costs. So to me, this should be welcome to the Trump administration, but I'm not sure that's how it came across yet.
The full statement here, producer James just put it in front of me, and this is from the Federal Reserve itself. Chair Powell said he and his colleagues on the FOMC will set monetary policy as required by law to support maximum employment and stable prices. There's your dual mandate. And we'll make those decisions based solely on careful, objective, and non-political analysis. How do you think that message was received by the president, Rick?
Yeah, I'm sure he's pretty grumpy about that right now. He thinks that his political analysis is what should dictate the Fed's action, not the other way around. And so my guess is he'll have something to say about that either this afternoon or in the coming day. And frankly, couldn't come at a more interesting time, this meeting between the Fed chair and the president, because my favorite analysis, the Michigan Consumer Sentiment Index, is due tomorrow. And we've had some pretty grumpy consumers, too. And it'll be interesting to see whether or not there's a reaction to any of this. But the indications early on is it's only getting worse for consumers out there. So at some point, I got to believe this is what's driving the president. He needs that consumer spending. He needs that infusion into the economy to keep the attention away from inflation, away from a slowdown in the economy.
My colleagues and I remain squarely focused.
Well, very fascinating stuff here. This is an interesting moment that we're going to explore a lot more in our second hour, and Rick and Jeannie will be with us. Our panel is together today. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, with the breaking news headline: Donald Trump and Jay Powell, the President of the United States and the Chair of the Federal Reserve, sat down for a talk today at the White House. Jay Powell may not have been delivering the message that Donald Trump wanted to hear. We'll have much more on this as we welcome our global television audience in our second hour as well. A conversation after an update from the White House with Greta Peisch, former general counsel for the office of the USTR, with her view on this ruling on tariffs. It's all ahead right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It was the meeting of the minds. President Trump and Fed Chair Jay Powell in the Oval Office today. Welcome to the Thursday edition of Balance of Power with breaking news from the White House. I'm Joe Matthew alongside Kaylee Lyons today at World Headquarters in New York. On Bloomberg TV and radio, Kaylee, interesting to imagine these two gentlemen together after all the rhetoric that led up to this moment, and it does appear, based on what we heard from the Fed, Jay Powell did not tell Donald Trump everything he wanted to hear.
Yeah, well, he certainly didn't say what the path forward for monetary policy would be, other than, according to the Fed, to stress that it will be dependent entirely on incoming economic information. Reading between the lines here, not dependent on the true socialing of President Trump. Of course, I do wonder how the tenor of their conversation around the economy may be different, knowing that tariffs are about to be pulled back materially because of a court ruling that essentially says those blanket 10% tariffs, as well as the elevated tariffs on China, Mexico, and Canada related to fentanyl, can no longer stand.
That's right. We've got a few stories to cover here, and that, by the way, you just mentioned was the biggest story until a few moments ago when we learned about this meeting, Kaylee. There's a news briefing about to begin at the White House. The press secretary will likely be talking about both. We haven't heard, interestingly, from the president yet, but we could later this afternoon. He does have a swearing in on the schedule. Just don't know if reporters will be in the room yet. But we're going to spend the next hour breaking all this down, beginning with a report from Tyler Kendall live at the White House.
Yep, and we'll get some analysis from someone who used to be the general counsel at the U.S. Trade Representative. Greta Peisch is going to join us as we consider the various legal mechanisms the president could still work with in order to enact his tariff policy, even if IEEPA has been taken off the books for now. We'll get into all of that ahead this hour, but we begin with a market check, and we're in New York with Charlie Pellet as he checks things out for us today. Charlie, it's good to see you.
Thank you very much. Big warm welcome to New York, New York. And we begin with developing stories, recapping, resetting headlines that you brought us in the past 30 minutes or so. A second judge has blocked some Trump tariffs in a small business case. And the story everybody's talking about right now. Fed Chair Jay Powell met with President Trump at the White House. That from the central bank in a statement. It represents their first such meeting since the president began his second term. Now, the Fed did put out a statement saying Chair Powell did not discuss his expectations for monetary policy, except to stress that the path of policy will depend entirely on incoming economic information and what that means for the outlook. Now, stocks have moved higher since our last update. The Dow, the S&P, NASDAQ solidly in the green right now, looking at a gain of 0.1% on the Dow, up 33, but the S&P up 0.4, up 24, NASDAQ up 0.6%, and the Russell 2000 index of small cap shares up 0.2%. The 10-year 4.42%, the 2-year 3.93%. Gold is up $35 the ounce now for the precious metal, a gain of 1.1%. West Texas Intermediate crude down 1.3%, 61.05 a barrel, and Bitcoin now down 0.5%, 106,750 on Bitcoin. Lots of earnings news to sift through. Nvidia shares remain higher, 4.2% gain there after earnings, and C3AI surging after earnings, up 26.6%. Salesforce reported last night down 5.3%, and Hewlett-Packard Inc. also after earnings down now by 8.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go. Balance of Power continues right now. They are here in New York. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We are here in New York today, but that doesn't mean that there's any shortage of things emanating from Washington to talk about. You've got a tariff ruling on the one hand that, at least for now, has limited the president's ability to enact the full sweeping nature of his tariff policy. On the other hand, President Trump is not just focused on trade today, but also on a meeting that just happened at the White House that we've just learned about. The first time since Donald Trump's second term began that he sat down in person with the chairman of the Fed, Jerome Powell, knowing that Jerome Powell is not always called that, at least if President Trump is the one speaking. Too late is the nickname.
You think he called him
Mr.
Too
Too Late. Don't know if that gets used anywhere outside of True Social for face-to-face interaction or not. But what we do know, according to a statement from the Fed, is that Chairman Powell made it clear that decisions of the Fed will be made, and this is a quote, based solely on careful, objective, and non-political analysis, Joe.
Therefore, too late. if you ask the President of the United States. To be a fly on the wall, we want to learn as much as we can about this right now. We're just on the precipice of the White House press briefing about to begin with Secretary Caroline Leavitt. Just outside the doors of the briefing room, we find Bloomberg's Tyler Kendall. What do we know about this meeting, Tyler?
Yeah, hey, Joe. So we're still waiting for additional details, but the Federal Reserve has confirmed that this was on President Trump's invitation that the Fed Chair Jerome Powell came here to the White House today. And they said that they did not discuss expectations for monetary policy and that any future path of policy is going to be data dependent, as we often hear from the Fed Chair. And Kaylee read this quote, but it's probably worth repeating. They said that any decision will be based on, quote, careful, objective, and non-political analysis. Now, of course, President Trump has said that he has no intentions of firing Jerome Powell, but ultimately we know he's been heaping on the criticism in recent weeks that he would like to see the FOMC ultimately cut rates. And even as he does pile on this criticism, of course, it comes amid his tariff plans. President Trump often says that his tariff plans will go hand in hand with lower interest rates, but they're defined by just so much uncertainty, which the administration says is strategic, but of course makes Jerome Powell's job harder as it puts him in between a rock and a hard place when it comes to inflation and any expectations of weaker growth. Now, interesting enough, we did hear from Chicago Federal Reserve Bank President Austin Goolsbee today, who said that if big tariffs could be avoided, whether that be through deals or potentially a court order, ultimately that could pave the way for the central bank to cut interest rates, given the underlying strength of the economy and the direction of inflation.
Well, Tyler, let's talk more about the president's tariff policy, which was dealt a blow in court yesterday as the judges unanimously ruled that IEEPA and the way he was trying to use it is not applicable for his sweeping tariffs. The administration obviously appealing that decision. But what comes next in terms of his pursuit to enact these levies on trading partners?
Right, Kaylee. So the administration really earlier this morning saying that they are prepared to take this fight to the Supreme Court. They are appealing it, and they say if they are not given immediate temporary relief when it comes to this ruling, then they could take this to the Supreme Court for emergency relief as soon as tomorrow. Now, at the heart of this ruling is that the U.S. Court of International Trade ultimately decided that the administration didn't correctly invoke IEEPA, the International Emergency Economic Powers Act, when they put forward their reciprocal tariffs. The White House had been arguing that persistent trade imbalances amounted to a national emergency, but the court said that that didn't really meet their definition, their justification for an unusual or extraordinary threat as outlined in the law. The administration, though, is really pushing forward here, and we heard from senior trade advisor Peter Navarro on Bloomberg Television earlier today, who said they still have some levers they could pull.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
So, Joe and Kaylee, keep in mind that this ruling extends to the so-called reciprocal tariffs. It also extends to those other instances where this White House has invoked IEEPA, including for tariffs on Mexico and Canada, as well as China. It does not extend to those sector-specific tariffs that have been invoked under Section 232 on the grounds of national security concerns.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House for us here on Bloomberg TV and radio. Thank you so much. And we want to hear a little bit more from Peter Navarro, who Tyler just pointed out, the trade advisor at the White House, who had an extended conversation about these policies on Bloomberg surveillance earlier today, also digging in specifically to the justification around IEEPA. This is what else he told our colleagues.
There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency.
So he says there's no question about this being an economic emergency. But we want to get another opinion now and turn to Greta Peisch, partner at Wiley Ryan, also former general counsel at the Office of the U.S. Trade Representative. Greta, welcome back to Balance of Power. I wonder if you are surprised by this ruling, if you think the administration has a point that actually there was justification for the president to use this authority, and how you think ultimately the Supreme Court might come down on this if indeed it escalates to that level.
Well, the thing about this case is that it is such uncharted territories. And I think that this has been a theme for the administration. They're really pushing authorities in the trade space beyond what they have been used for before. This was true in the first Trump administration, and it's true now. And that really makes the outcomes of these cases a bit unpredictable, which is maybe why we see such surprise today of the outcome that came out of the CIT. But there's going to be a lot of twists and turns to come with the motions for stays to hold the order, both at the lower court, also at the Court of Appeals, potentially going to the Supreme Court tomorrow. So, you know, I think we don't know where this path is going to take us, but I think there's going to be twists and turns along the way.
Well, isn't part of the story here, Greta, that nothing actually is going to change? If this White House is seeking a stay, then pretty much everything stays in place. You add Section 122, Section 232, we're all apparently experts on this stuff now, that the White House feels like it has a pretty strong hand beyond the emergency argument, that when it just comes to basic procedure, they're going to keep doing what they're doing.
I think that's right. I think that's what you heard from Peter Navarro. I think that would be consistent with the direction of the president's given and the importance he's put on this policy and the reasons behind it. So whether they prevail in the courts and are able to keep these tariffs in place, or if they have to look to another tool like Section 122, we just keep adding numbers to our number basket for tariffs. Yes, I think that you would say there's likely to be a continuation of this policy in one form or another.
So does it become then just a question of the timing it actually takes to enact the policy, Greta? Because if you need full investigations in order to use some of these authorities, that would suggest that he can't necessarily find ways to reimpose tariffs on trading partners by July 9th, for example, when the deadline for negotiations on trade deals is supposed to be.
Right. Well, you know, every trade authority has pluses and minuses. And IEEPA, the authority that has been, its use has been struck down, it's very flexible and very fast. And so that made it very attractive for the administration to use. And other authorities do have drawbacks. Some of them, as you say, require investigation. That's the case with Section 232, these sector-specific tariffs like steel, aluminum, autos, and there's a number of other ongoing investigations. That's true of Section 301, which is the authority that was used to put tariffs on China in the first Trump administration. Now, there's a new authority that was actually cited in the case in the order pausing or invalidating the IEEPA tariffs. 122. This is a balance of payments, balance of trade authority that hasn't been used before. Doesn't require an investigation, so that could go on pretty quickly. Now, the downside there is it only lasts for 150 days, and you can only go up to 15% in the tariff level. So again, drawbacks is that you have speed with that authority, but there's limitations on its use.
Much has been made, Greta, of the fact that we got a ruling from judges appointed by Barack Obama, Donald Trump himself, and Ronald Reagan. And I want to turn you into a legal analyst for the purposes of this conversation, but how are you reading into that?
You know, I don't read too much into it. This is also, it's the Court of International Trade. These are experts on trade authorities. They come at it from a particular perspective. They've dealt with many of these authorities many times and thought about the delegation of tariff authority from Congress to the executive branch and what the contours of that may be. I mean, I think it's more about, to me, this court and how it thinks about these authorities than maybe the particular people who were on the panel in this case.
What do you think this means, Greta, for negotiations that are still ongoing between the U.S. and trading partners? Is there a material amount of leverage lost here if Trump and his proxies in the administration who are negotiating on his behalf can't say, look, if you don't agree to this, we're just slapping X tariff on you. If they don't necessarily have that power because the courts have said that they don't, does that substantially weaken the United States' hand?
I don't view it necessarily as a big change, and there's two things going on. One, for example, for the UK, the concessions they received were around not the tariffs that have been struck down yesterday, but around the 232 tariffs on autos, on steel, aluminum, on a potential pharmaceutical tariff action, and so many countries are still interested in those tariffs. And then again, I think there is the prospect of the administration using other tools to impose tariffs. And it's not just 122 and these 10 or 15% tariffs, but could they launch a Section 301 investigation with respect to particular countries and put in place the prospect of even higher tariffs? It's a possibility. And so, I think that trading partners are going to take a beat to assess the situation, what they're hearing from the administration, from Peter Navarro today, from the press secretary, from the president himself. But I think they're going to probably take the view that the administration, the president's going to continue to pursue this policy, and that they're going to have to operate under those parameters.
This is a court that not many people had ever heard of. I think before this story. When you're working in the office of the U.S. Trade Representative, how often are you interacting with the CIT, the Court of International Trade?
Well, it is the court that the trade agencies interact with. So any statute, so for example, Section 301 is another tariff statute. There has been litigation ongoing since the first Trump administration. Was ongoing when I was at the U.S. Trade Representative's office that was before the CIT, and it is that court of first instance that every tariff action goes to. So for those in the trade sphere, it's not obscure. It's where all of our cases and controversies funnel through.
And finally, Greta, we just have a minute left here, but knowing President Trump in recent weeks has said if negotiations with partners don't go well, that the U.S. is just going to set a tariff rate, tell countries what it costs to do business with the United States. Unless he pursues one of these other authorities, should we assume that he, in fact, isn't going to be able to do that in these weeks, that he won't have the authority to do so?
Well, it may be difficult for him to do so. There is an even more obscure statute called Section 338, which also has not been used and has been, it talks about unfair practices, discrimination. That's another potential tool. There's a lot of questions about the process to invoke it. So, never say never, but it will certainly be a challenge. And the president and the administration may need to jump through some hoops, do some work to fulfill the requirements of these statutes in order to follow through with that. But again, I think that the specter of higher tariffs, can be put in place immediately, even if it ends up being delayed in impact.
Because it can always be more obscure. We have Greta Peich. Thank you, Greta, so much for walking us through all of this. Partner at Wiley Ryan, former general counsel, the office of the USTR. And Kaylee, we do have a headline coming out of the news briefing at the White House. Not a shock to be hearing from Caroline Leavitt today, is it?
No, and perhaps not a shock what she's saying either. She says the Trump administration saw another example of judicial overreach using his full and proper legal authority, hence the appeal. We'll have more next here on Balance of Power on Bloomberg TV and Trade.
121 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that Synopsys suspended its third quarter and fiscal year guidance on China export restrictions. That headline right now on the Bloomberg Professional Service. The stock, Synopsys, lower now by 4.7%. The other major story we're monitoring, Fed Chair Jay Powell met with President Trump at the White House this morning, their first such meeting since the president began his second term. Right now we have got the Dow, the S&P, NASDAQ all advancing, with the S&P up 23. Lots of moving parts to today's trading, and we got you covered. The S&P up 0.4%, the Dow up 50, up 0.1%. NASDAQ up 110, up by 0.6%. The Bloomberg Mag 7 index up 1% right now, getting a lift from the likes of NVIDIA after earnings up by 3.9%. 10-year at 4.42%, the 2-year 3.94%. Gold up $33 the ounce, spot gold up 1%. West Texas Intermediate crude down 1.5%, $60.92 a barrel. Lots of earnings, specifically retailers. Best Buy reducing its sales and profit outlook as the electronics retailer grapples with tariffs on imports from China, its top source of goods. Right now, Best Buy down 8.2%. Foot Locker's sales slump persisted in the latest quarter, a potential headache for Dick's Sporting Goods as it prepares to acquire the struggling sneaker chain. Right now, we got Foot Locker up 0.1%, Dick's Sporting Goods up by 1.6%. And Kohl's reported better than expected comparable sales, a positive sign amid a tumultuous run of events for the retailer. Kohl shares are down 1.3%. Balance of Power continues right now. They are here in New York, and we love them for it. Back we go once again. Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We're here indeed with Charlie in New York, but have no fear, Washington is carrying on just fine with its usual business without us present, including at the White House, where the White House Press Secretary Caroline Leavitt right now is briefing the media. Not starting to actually take questions from journalists yet. She just had a lot she wanted to say first, specifically on the ruling from last night, in which, of course, Trump's authority to use IEEPA to enact his sweeping tariffs was struck down. The White House press secretary characterizing that as another example of judicial overreach, saying that the trade court is abusing its judicial power, that Trump's rationale was legally sound, that courts should have no role here, except for maybe, Joe, the Supreme Court. As she says, the Supreme Court needs to put an end to this tariff challenge.
Yeah, she's hitting it all. This is, I'm sure, quite the moment to be in the briefing room. And when we get to questions, it could get a little bit chippy, as the press secretary is really the first since Peter Navarro spoke early today on Bloomberg TV and radio, the first member of the administration to throw back on all this and give us a sense of what exactly President Trump is thinking. He also, by the way, does have an event later on today, Kaylee. It's a swearing in. You see this, the new chief of protocol. Not supposed to be open press, but he's got a way of opening these things to press. If he's angry, if he wants to talk, if he wants to make a point, that would be the time that he does it. As we play this to our panel, Rick and Jeannie are with us today, Bloomberg Politics contributors. Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress, our Democratic analyst, alongside Republican strategist Rick Davis, partner at Stone Court Capital. So, Jeannie, here we go in the briefing room today. The line: there's a troubling and dangerous trend of unelected judges inserting themselves into the presidential decision-making process. That was the press secretary a moment ago. You could apply that to almost anything that the president has done here and the challenges that we've seen on a legal basis. What's the White House's next move? Just keep the tariffs, ignore the court?
Yeah, I love the underscoring of unelected. Of course they're unelected. Article 3, according to our founders, says they must be unelected. So that isn't keeping with the Constitution. She's repeating what Stephen Miller said yesterday, which was this is a judicial coup. We're living under a judicial tyranny. When the reality is, if you're going to push the boundaries of executive power in the way this administration has, if you're going to continue to do that, you are going to meet the resistance from the third branch, sometimes the first, not in this case, but the third branch that every other president has been the beneficiary of, or as they would say, has been the biggest frustration of their presidency. I mean, they just have to go back and take a look at FDR, how frustrated he was with the courts. He threatened to pack the courts. Joe Biden, Barack Obama. I mean, every president has felt this frustration. Of course, this presidency is pushing the boundaries even more. And so they're going to get this. It's nothing about a judicial tyranny or coup or overreach. This is the nature of Madisonian government, the way the framers wanted it.
Well, Caroline Leavitt isn't done talking about this. She just told reporters that these judges are trying to block the president's power in the policies he was elected to enact, Rick. But I wonder if that's how you look at it. It's not necessarily saying that he no longer has the powers given to him under IEPA. He just can't apply them in these specific circumstances because an economic emergency, as he describes it, is not existent right now.
Yeah, I think that, and it even goes deeper than that, Kaylee, that IEPA isn't the appropriate vehicle to do this kind of trade policy. It really is specifically designed to create sanctions on countries that are in violation or of this economic emergency that was being discussed. And so I think there's a lot of depth to this decision. The fundamental issue that you were just talking to Jeannie about is, the basis of our government. It's separation of powers. The reason judges are the third form of government is because they aren't subject to the political whims of the electorate. And the founders wanted a system of checks and balances where the political system was checked by both the judiciary branch and in some cases Congress, and in some cases the executive branch. So the first thing I heard out of the White House this morning was Peter Navarro, attacking the judges for not being elected. Well, maybe he should read the Constitution and the Bill of Rights and understand that that's the way it's supposed to be.
Well, so we're just going to be watching for the next missive on impeaching judges, I suspect, although maybe not from Elon Musk this time. Caroline Leavitt saying that the White House hopes the Supreme Court will weigh in, Jeannie. That's how this ends, right? This is turning into the Supreme Court show in this administration.
They're going to have a very, very long summer. They like to leave like a school year, have the end, go back home. I don't know that they'll get much of that. I do think they will appeal this up. I think the question is, does the court take it on an emergency, as an emergency appeal, or do they make it go through a regular order? I mean, that is going to be interesting. We've also got a decision coming out from the court this term on executive power. So the court's role here is, pronounced, and it's one that the Chief Justice has talked about, saying that we are here to set the limits, and it's something that has frustrated the administration. But the reality is that this is really the purview of Congress, and that is the big issue here. Congress has the power to tax. In this instance, they delegated some of that power in emergencies, as Rick was just talking about, to the president. And so Congress can also step up here. But I think about this case, one really under-discussed aspect. This case was filed by small businesses, similarly to the case that just came out where the judge blocked from Illinois, the Illinois toy importers being tariffed. So what we're seeing here is not big companies, the kind that we often talk about, the Coca-Colas of the world, the Adidas, the big companies, rather small mom and pop stores who, unlike the big companies, are not afraid to take Donald Trump and the administration on because they know if they don't, they are out of business. But in the case of the big businesses, they have the facility, the ability to ride out these storms, and they don't want the blowback from the Trump administration. So it is the fight of these small businesses that's really so fascinating to me as they take it to the administration via these courts.
Well, when we consider that all of this is happening as this administration, Rick, is actively engaged with trade negotiations with a number of U.S. trading partners, this is something that Caroline Leavitt was just asked about in the briefing room as to why other nations would even continue those talks in the aftermath of this ruling. And she says they understand that the administration is going to win. We intend to win. We already filed an emergency appeal, and that they have faith in Trump. But if you're a trade representative from another country, do you take the threats of this president as seriously now?
I think you have to, because there are other tools that they can use. It wouldn't surprise me that later today they'll have the trade rep come out and talk about all the other tools 301 decisions, 122s. I mean, like, there are ways that if the administration loses this case, that they can still prosecute a tariff war. And so it is not a threat without teeth. The difference is it's less random, it's not as extreme, and maybe that's even better, right? Put some parameters around the trade war so it's more predictable and less volatile. But you're still going to have to cut a deal with the White House if you're a foreign nation with a trade surplus. I mean, that's really the bottom line. And so wouldn't surprise me that all the negotiations keep going in order to get this behind them, because it will take some time.
Well, who needs the court here when you've got the taco? Jeannie, I bet you heard about this. The taco trade is what they're calling this on Wall Street. Trump, always chickens out. You know, you threaten the tariffs, then you pull it back, and the market rallies. That's Taco Tuesday. We've seen this happen a couple of times, actually. And imagine being the reporter to ask Donald Trump about this. It happened yesterday in the Oval Office. Let's listen.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And, if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax, you call that chickening out?
Is the acronym fitting here, Jeannie? And are you surprised he got upset about that? Are you surprised he's not in the briefing room right now?
Do not call Donald Trump a chicken. My favorite part of that story was that even some of the people using the term tweeted out to the reporter, be quiet, don't tell him, because if you tell him we're calling him that, he won't walk back anymore. So investors not happy with that. The poor reporter. I think, by the way, Donald Trump should take this all as a win. He doesn't have 90 deals in 90 days. This isn't good economic policy. He can blame it on this court that none of us ever heard of until the other day. And he can say, listen, I tried, but now we have to just go back and I need to work on cost and inflation. It's a win for him. He should take it, but I don't think it's going to happen because he loves himself some tariffs.
Well, yeah, and he intended these tariffs to also be a way to raise revenue to help offset some of his tax cuts. Rick, in our final minute here, does this actually make that legislative effort harder in the Senate if they can't say, look, we have math to offset this?
Well, I think that the whole tariff discussion about having revenue is more of a talking point than a reality. I mean, there's very little that anybody can point to as to, like, what is the net receipts of the federal government and how they would apply. And the numbers are so massive, between $2.5 to $3.5 trillion of deficit add-on over the next 10 years. A few hundred million or billion aren't going to really make a big impact in getting votes. They've got a big hurdle in the Senate. A lot of people, Ron Johnson included, have already started staking out pretty tough stances on the massive amount of debt that this bill collects up on the federal deficit. And that's the issue they're going to have to figure out. And they're going to need a lot more than what's currently in the trade deficit category.
All right, Rick Davis and Jeannie Shanzano, our political panel, joining us here on Balance of Power. Thank you so much. And we'll have more on that effort in Congress, the intersection with tariffs, plus the meeting that just happened at the White House with the chairman of the Fed and the president. When Patrick McHenry, the former House Financial Services chair, joins us straight ahead on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at gains for the U.S. stock market with the Dow, the S&P, NASDAQ, all advancing right now. Another busy day. The developing stories with the S&P up 16 right now. 59.04, up by about 0.3%. We're keeping an eye on developments in terms of trade, the legal system, also a flood of earnings as well. The Dow up 23 now, up by about 0.1%. NASDAQ up 76. That is a gain of 0.4%. We've got the 10-year 4.41%, the 2-year 3.93%. Gold up 1%, 33.19 the ounce, and West Texas Intermediate crude down 1.5%, 60.90 a barrel on WTI. Bitcoin down 0.7%, 106,620 on a Bitcoin. Shares of the New York Times right now, they are trading higher. We've got the New York Times shares gaining by 1.3% after the newspaper reported that its parent company has agreed to license editorial content to Amazon for use in the tech giant's artificial intelligence platforms. Recapping, stocks higher, S&P up 18 right now, up by about 0.3%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. They're here in New York, and we love them for it. Back we go once again. Your hosts, Joe Matthew and Kaylee Limes.
Swimming in the fishbowl here at World Headquarters in New York with the great Charlie Pellet. Thank you, Charlie. We'll get back to Charlie Pellet for more on the Thursday trade as we make our way through this program, the fastest show in politics on Bloomberg TV and radio, as we keep our eyes and ears on a White House briefing that's underway right now. Press Secretary Caroline Leavitt talking about the federal court ruling on tariffs that we've been discussing, as well as the meeting that we just during the program learned about between President Trump and Fed Chair Jay Powell. Kaylee, the headline says it all. Trump told Powell in person the Fed is making a mistake on the rate call. We know that Donald Trump wants rate cuts. We know that the Fed does not see the conditions for them. My only question at this point is whether he called Jay Powell too late, his nickname for the Fed chair.
Yeah, I wonder if that one gets thrown around face to face. We do know, according to a statement from the Fed, though, that Chairman Powell didn't seem to indicate to the president that the Fed feels like it's making a mistake, not lowering interest rates, making it clear, according to their statement, to quote it directly, that those decisions are made based solely on careful, objective, and non-political analysis. We also should point out here, this is the first time these two have met in person since Donald Trump assumed the presidency for a second time. For all of the kind of vitriol that the president has thrown at Jerome Powell on social media or in various briefings, he hadn't actually had this conversation with him directly until today.
It's a day like this you wish you could talk to Patrick McHenry.
Good thing we can here on Bloomberg TV and radio. The former chairman of the House Financial Services Committee and now Bloomberg Politics contributor is with us from Washington, D.C. Mr. Chairman, we've obviously talked with you extensively before about the feelings the president has about the rate policies of the Federal Reserve. Meetings like this aren't necessarily unusual. The chairman has made it very clear he would never initiate a conversation with the president unless the president asked him to, which is what we understand happened here. But telling the Fed chair in person that he's making a mistake, do you expect that actually changes his decision making?
No, but I think it's also, this is not unprecedented for the president and the Fed chair to meet. It is rare, yes. But I think what the president is saying publicly and what he said privately are matching up quite simply. The president has a very different view of inflation, has a very different view of Fed rate setting policy than does the Open Markets Committee and the chair of the Federal Reserve. And so for the president to air those his views and those concerns, I think it's fine to do. I don't think that changes the Fed policy setting. I don't think it changes the inclination of the members of the Open Markets Committee to change course here. But it also is an opportunity for the president to highlight in our political discourse his difference of opinion and his separate view of inflation and rate-setting policy.
Well, we owe it to the White House, Congressman and the press secretary, to deliver the line in full. What she said was, President believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries. Jay Powell would tell you that we're at an advantage because we're not knee-jerk changing interest rates and we're trying to create conditions for growth. How do you see it?
Well, I think that is, in fact, the case. I think the Open Markets Committee is using the best information that they can. I do think when the president has a critique of the Federal Reserve that they changed policy too slowly during the Biden administration. They did not raise rates at a fast enough clip to curtail inflation, and they were too late. In fact, I think Chairman Powell has said as much publicly. But right now, I think what the most important thing for us to do is get inflation in check. There's a lot of turmoil, obviously, with tariff policy. There's a lot of uncertainty with the current tax code expiring and a massive tax increase going into effect at the end of the year. And then an open question about whether or not we're paring down our federal budget spending enough and paring down the deficit enough to match what the Treasuries market is trying to tell us, that we're spending too much and our debt is too high. So there's a lot to react to and respond to. But I don't think the Federal Reserve is off base at waiting for more information.
Well, you allude to what the Treasury market is trying to say, and a former member of the House Financial Services Committee under your leadership, still one, in fact, Republican Congressman Byron Donalds was with us on this program yesterday and also called out the bond market specifically. This is what he told us.
I look at the bond market, and one thing is crystal clear. The bond market is looking at the United States, and they are saying, you better get your fiscal house in order, or we're going to charge you more to borrow money. No nation can thrive under that kind of a scenario. So we have to be serious on Capitol Hill.
And he went on to tell us, Mr. Chairman, that he actually hopes the Senate pursues steeper spending cuts in its version of the bill now that it's in its hands. The question is whether whatever the Senate passes can get through the House once more. Are you expecting that the Senate is going to address this in a materially different way?
No, but I think what the bond market is screaming at Congress about is to cut down on spending. The fact is the one big beautiful bill that they're discussing, the reconciliation bill that they're debating, is in essence continuing the current tax code that we have today and extending it into next year and for the coming years. That's not a tax cut. What they're doing is avoiding a tax increase. There are some pro-growth policies in there that cost additional revenue to the federal government, yes, in the short term. There's a few new things like the political discourse on tax and tips, taxing tips, Social Security benefits, a few of those things the president talked about, and the necessity to pass the bill out of the House, which was changing the SALT deduction. Those things are all costly, yes, but in substance, the tax part of this thing is taking the current code and extending it. What the bond market is saying is that the cutting side, where you're getting federal savings, federal budget savings, is not enough. And so let's put that in context. What the House just passed was over 10 years about $900 billion to $1 trillion of spending cuts. 2 years ago, at this time, we negotiated, Garrett Graves, on Speaker McCarthy's behalf, negotiated with the White House for a spending reduction package to raise the debt ceiling. That resulted in $1.5 trillion of savings over 10 years. So for all Republican majorities in the House and the Senate and the White House to pare down spending by $900 billion doesn't stand up to what President Biden did at the bequest of Republicans. So that's small. And that doesn't even compare to what Republicans got put in place under Obama, Speaker Boehner did under Obama, which resulted in $2.1 trillion of savings over 10 years. So this is a small spending cuts package. Congress needs to listen to that, and I think Byron Donalds is right here.
Well, that's incredible perspective, and I appreciate your walking us back through that, Congressman. What does it tell you then when you hear, Byron Donalds is no shrinking violet. If he's hoping the Senate finishes the job and couldn't get it done in the House, then who can?
That's exactly the case here. And I think the high water mark for spending cuts comes out of the House, not out of the Senate. The tax policy change, I think what we're looking at is a narrower bill that makes it through the rules process in the Senate. A narrower bill that has less cost savings to the federal taxpayer and actually pares down the policy included that actually will reduce spending over time. That is not a good thing, and I think that's a big concern that the bond market is telling policymakers to look have a tougher look at.
Well, especially if you consider that part of this fiscal picture was supposed to be tariff revenue as well, which maybe isn't going to be quite as robust in the aftermath of this ruling from last night on IEEPA. Mr. Chairman, I do wonder your reaction if you buy the administration's argument here that this court is wrong, that using those emergency economic powers is indeed justified in all of these cases.
No, I think there are a number of, they have a number of authorities under tariff policy in the broader tariff policy basket that they can utilize. They may have referenced the wrong act in order to take the actions they've had, but the president has broad authorities on tariffs, and I think that this president will take those broad authorities and get a better court ruling using perhaps different pieces of law. But I think the tariff policy here and the president's actions here will stand, but I think they've got to do a better job of justifying where they derive their power and in the utility of that law.
Patrick McHenry, the Digital Asset Market Clarity Act has been introduced. I'm not sure what you think of the name here, but we've been talking a lot about a market structure bill going back to when you were running the committee. Based on the progress you've seen on stablecoin legislation, will there be enough Democrats to make this law?
Well, I think FIT 21 was a better name, and in fact, French Hill is the one who named the FIT 21 when it passed last Congress under my chairmanship, and that was his legislation. But I'm not much for congressional naming of bills, frankly. But the bill's a fantastic effort.
Clarity Act.
Well, okay, fine. Call it the Clarity Act. But fit for purpose, when we have a fit for purpose regulatory regime, that's what we're going for here. You have a new technology that needs to have a new set of regulation. It is distinct from securities, distinct from commodities, existing laws. And I think this is a very good effort by congressional lawmakers. I think what we're going to see here in the coming month, maybe two, is that you're going to see a merging of the payment stablecoins bill that the Senate is likely to pass next week and a merging of the market structure bill. And I think the president will have one big, beautiful crypto bill on his desk before the fall comes.
But is he making it harder for this to be accomplished because he also has vested interests in crypto and companies that bear his name or his family's involvement is in? This is an issue that Democrats are raising, is potential conflict of interest here.
Doesn't make it easier. And it doesn't make it easier for congressional Democrats to do what they know is solid and real policy work that is necessary for us to have digital innovation and digital assets here in the United States. So I think what you're seeing here in the Senate with the struggle that they have had to pass a payment stablecoin bill, which is not an overly complex bill, it has taken them 3 months to pass the bill and nearly 2 months of wrangling for floor action to pass that bill. And that is because Democratic lawmakers have major concerns about the Trump family activities in the world of digital assets. Now, they're going to overcome that, and I think clarity of law here will provide a rules-based regime for the United States to engage in digital assets, and will clean up a bit of the market dysfunction that we've seen with some of the excesses of crypto over the last decade.
What gets done first, reconciliation or the Clarity Act?
I think it's going to be reconciliation. The backstop here is raising the debt ceiling, and that is why the reconciliation bill has to take precedent. But I think they're going to be able to do both. I think I give them really a better than even shot of getting both done before the end of July, before the August recess.
I hope our viewers and listeners heard that from the former chair of the House Financial Services Committee. I feel like that's tradable.
But like I said, it's going to be a long, hot, nasty, crazy summer here in Washington. Yes, it's going to be fun for us to talk about it.
Yeah.
I miss you all in the studio. This is a very lonely place here in the studio without both of you here.
Thanks for keeping the chair warm. Look, I think we're blessed to know that we will have Patrick McHenry with us for the summer. Thank you for being with us, Mr. Chairman, as always. Bloomberg contributor Patrick McHenry. I just like saying it, Kaylee.
Yes, in addition to all of his other decorated titles,
indeed.
former chair of the House Financial Services Committee, weighing in on all of the stories we're following today. A meeting between the Fed chair and the president, a president who was called a chicken yesterday and now is faced with a ruling that is stopping some of his tariff ability for now. We'll have more of it on the late edition of Balance of Power as well. So we'll see you at 5 p.m. Eastern here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yep, we are across Bloomberg platforms. Carol Master along with Tim Stenivek live here at Bloomberg headquarters in New York City. And fade out, everybody, because, man, that is... I think it's safe to say today's trade in U.S. stocks.
Yeah, and I think a lot of people thought going into the session today, given what we heard from the courts last night, and also what we heard from NVIDIA, that we'd see more of a surge with equity indices today. The Dow down in the red right now, the S&P 500 giving up some serious gains earlier in the session, up about 0.2% right now.
Having said that, most names in the S&P 500 are actually higher today, and NVIDIA is up almost 3%. So we're going to talk about NVIDIA, what you need to know from that latest financial update. Also, what we got out of our chat with the CEO, Jensen Huang. That's coming up. That's in focus. Also, we're going to get into what you need to know about the president's meeting with Fed Chair Jay Powell, plus that court ruling that Tim mentioned at the top that we thought maybe would have us off and running on the equity side of things. All we know is it seems like a setback for certainly President Trump and his tariff persuade.
Well, speaking of tariffs on the U.S. and China relationship, Elizabeth Economy over at Stanford's Hoover Institution is going to weigh in on that. Also, we'll talk leverage finance with Chris Bonner, Managing Director of Leverage Finance of Americas over at Goldman Sachs.
All right, let's get a check on the trade, folks, as we've got a little bit of a mixed market here, but let's get the details from Charlie Pellet.
Hi, thank you very much. Lots of news today. We got you covered. Stay with Bloomberg Business Week Daily for the latest. We got the S&P right now holding on to an 11-point gain, up by about 0.2%. The Dow right now fluctuating between gains and losses. Green right now up 2 points. Little change. That's the key takeaway on the Dow. NASDAQ up 46 for the NASDAQ Composite Index, up right now by about 0.2%. Your 10-year 4.42% with the 2-year 3.93%. Gold up $37 the ounce. That's a gain of 1.1%. And West Texas Intermediate crude down 1.5%, $60.88 a barrel on WTI. Bitcoin now down by 1%, 106,294. We'll be talking a lot about earnings today, but briefly, we got NVIDIA up by 3%. Right now, shares of C3AI surging 23.5%. Salesforce down 5%, and HPQ Hewlett-Packard Inc. lower by 7.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, folks, you're up to speed on the markets on this Thursday. Let's get to what is, no doubt about it, one of our most read stories, if not the most read story on the Bloomberg today, and has to do with President Trump's tariff strategy. And it's really been thrown into turmoil after a U.S. court issued a rare rebuke blocking many of the import taxes he has threatened and imposed on other countries. Now, the Trump administration said it would ask this U.S. Supreme Court to intervene as soon as tomorrow if a federal appeals court doesn't immediately put on hold a decision finding that most of the president's tariffs are illegal. White House senior counselor for trade and manufacturing, Peter Navarro, actually weighed in this morning on Bloomberg surveillance and seemed to indicate it's just a bit of a bump in the road.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
There you have it. Peter Navarro, White House Senior Counselor for Trade and Manufacturing on Bloomberg Surveillance earlier today. Let's get into it. We got a great roundtable right now. With us here in the studio is Bloomberg News U.S. legal reporter Eric Larson. Also joining us is Bloomberg News global economy reporter Enda Curran. Enda's joining us from our Washington, D.C. bureau. Eric, I do want to start with you because the legal side, I mean, that's what this is about. This is about the legal side of this. What exactly is the court ruling that actually blocked many of these tariffs?
It was actually a pretty sweeping ruling. It was called a summary judgment, which means that the plaintiffs in this case, a group of small businesses in about a dozen Democratic-led states, win the case without even having a trial. There was no motion to dismiss. There was no preliminary injunction. It was a summary judgment in the plaintiff's favor and a permanent injunction against these tariffs that were instituted under a particular emergency laws, what they all had in common, the International Emergency Economic Powers Act. So, of course, there are some other tariffs that Trump has in place that aren't affected by this, but these were his Liberation Day global tariffs and some other tariffs against China, Mexico, and Canada related to border security and fentanyl.
It sounds kind of definitive, is it? It sounds pretty serious. Like if a court does this, it's like, okay.
Well, yeah, but it's like every other court ruling that we have, it's going to be appealed, and who knows what the Federal Appeals Court for the Federal Circuit, which is what this one is called, how they'll come down on this, or the U.S. Supreme Court, which seems inevitable. They'll weigh in potentially soon, at least in regards to putting this ruling on hold during the appeal.
Well,
yeah, go ahead.
Can we just stick with the courts for a second? Because the Trump administration said it would ask the U.S. Supreme Court to intervene as soon as tomorrow. If that happens, so then what does that mean?
So right now they have the administration has asked the appeals court, the federal appeals court, for a stay to put the trade court's ruling on hold pending appeal until the appeal is resolved. But if the appeals court doesn't move fast enough on that stay, Trump is saying that by tomorrow they'll just skip over the appeals court and go straight to the Supreme Court and ask for this emergency stay.
Eric, but could the Trump administration, from a legal perspective, reclassify these tariffs the same way that they've classified tariffs in the past that have been upheld as legal in court, base them on an emergency?
I mean, certainly there are plenty of ways that the administration can implement new tariffs or try to rejigger these ones, but they certainly can't do them under this law. And the reason that they used this law was because it essentially, according to the administration, allowed Trump to declare essentially whatever he wanted to be a national emergency, and then invoke this International Emergency Economic Powers Act from 1977 to implement whatever tariffs he wants against any country at any amount for any length of time that he has full authority to do that. And of course, these national emergencies that he declared were, on the one hand, for the Liberation Day tariffs, the trade imbalance that we had, the trade deficit with various countries, and on the other was this border security fentanyl issue. And I'll just note that one of the things that the court held was not only does Trump not have the authority at all under this emergency law, because it was never intended to be used that way, but also the emergency he cited in regards to fentanyl and border security. The tariffs against Mexico and China and Canada don't even address that issue.
All right, so this is us from New York. Enda, the ball is in your court in D.C. Tell us about some of the conversations you guys have been having in the newsroom over this, because this feels like a very big deal. And I just think of what we have all been focused on really since almost day one that President Trump started his second term was kind of his moves on tariffs. So help me understand how you guys are seeing it. And what does it mean if all this rolls back in terms of the U.S. economic picture and the global economic picture?
Well, it's certainly a major setback to President Trump's signature economic policy on the trade front. Carol, no doubt about it. Now, obviously, you just had an excellent explanation on the legal side of it there. I think from the policy side down here, people are saying there's still a lot of uncertainty, though, because this story is not yet finished. If you go to it at face value, these emergency tariffs are off the table, but there is the option of getting the stay, there is the option of going through the appeals process, and then what happens on the other side of that? And then leaving that aside, you have other existing routes also to pursue tariffs in other sectors. So, for example, the sectoral tariffs. We could still see fairly high tariffs on drugs coming into this country, on lumber, on semiconductors, and on all of the products that have those components inside of them. So there are still other avenues for tariffs on goods to go up. And then the secondary question from all of that then is, what about the revenue from all of this? Remember, the White House had said they were going to raise hundreds of billions, if not trillions, from the new tariffs they're putting on the goods coming to this country. What happens, the projections for that tariff revenue now, especially in the light of the tax bill? And then that's where you get into the whole story about what happens in the appeals process, and leaving aside the appeals process, what other options would have to go ahead with other tariffs anyway. So that's probably a confusing way of saying to you, Carol, that it's a dramatic development, but in truth, it's not over yet and has a long way to go.
It's a dramatic development, but Peter Navarro said to our Bloomberg surveillance team, that make no mistake, the White House knew what this was coming and was prepared for a situation such as this. The idea that, this could be challenged in court. And how you think about this when it comes to the effect on the global economy, the way that our relationships are going with our trade partners. What's your view there? How does it change the models of what folks are thinking about when it comes to economic growth, and really how these decision makers at the helm of companies are making decisions about how they're spending their money and what they're importing?
Yeah, so on a headline basis, leaving aside ideology or politics, whether you agree with this trade approach or not, on a headline basis, let's say these tariffs are suspended. That suggests that the average tariff rate on goods coming to the US will be much less. Now, Bloomberg Economics were saying is around 27% before the ruling. It could bring it all the way down to 4%. But that obviously implies less pressure to increase prices for consumers, and of course, by extension, less of a threat to economic growth. So there's a headline story there that this is good for the economy. But the reality is there's still so much uncertainty as to where this is going. I mean, if you're an average business right now importing goods from China, you're just on the phone to your logistics broker or to the Customs Bureau asking, what tariffs am I going to pay when these goods arrive? Will I get refunds on tariffs that I've already paid, for example? And if you're sitting there thinking about, do I hire staff? Do I expand my business? Do I invest? Well, you know, there's still a lot of question marks around where trade policy will ultimately go. So it's a tricky one to get across here because it is a big development. It does potentially remove so much of the kind of uncertainty around what might happen in inflation and growth in the country from those who criticize tariffs. But in truth, we know the story hasn't finished yet, so we'll have to see over the months ahead.
Hey, and before we let you go, I just want you to weigh in on what we heard from the White House and also from the Federal Reserve about a meeting that took place between Fed Chair Jay Powell and the White House. The White House saying that the president pushed Federal Reserve Chair Jay Powell to lower rates at their first in-person meeting since the president's inauguration. How are you looking at this? How are you reading into it?
Well, very interesting that they met in the first place. I think Chairman Powell said before, I don't think he met President Biden in those circumstances once during his term in office. Chairman Powell has said in a statement from the Fed that he didn't give any direction on monetary policy, but the White House press secretary made it clear that President Trump did say he thinks interest rates are too high. There's clearly a tension there. We don't yet know whether or not this meeting will have sort of eased any of those tensions and led to a broader understanding between the two, or whether ultimately we'll see, you know, another backlash from President Trump against the Fed. But very notable that the meeting took place.
Yeah, wonder how much they talked about trade and tariffs. Eric, last question to you. All right, so you laid it all out in terms of legal. So is our focus tomorrow to see if this goes to the Supreme Court? I mean, could it go there that quickly?
Yeah, absolutely. We've seen a lot of different cases where over Trump's policies that have either gone there really fast, usually over this stay question, whether or not to temporarily block lower court orders. So I think they've done this before. It's something they might be willing to do. And it could happen soon if the lower court doesn't do it first.
All right, pretty amazing. Another development. Eric, thank you so much. Great stuff in terms of the legal side of all of this. Our U.S. legal reporter at Bloomberg News. Check him out on Twitter at EE Larson. And then, of course, out there in Washington, our own Enda Curran, global economy reporter at Bloomberg News, also on Twitter, X, Enda Curran.
Hey, we're going to have more on the implications of this when we talk to Elizabeth Economy over at Stanford's Hoover Institution. We're going to do that in just about 10 minutes. But now let's check on the mood of the financial community.
All right, let's do that. And this is happening at the 10th Annual Goldman Sachs Leveraged Finance and Credit Conference. It's underway in the very lovely Dana Point, California. Goldman, by the way, saying the conference is a unique opportunity to listen to content and engage in high-quality dialogue. And that's exactly what we're going to get. Let's go to global finance correspondent Shonali Basak here at Bloomberg. She's at the conference, and she's got a very special guest. Shonali, all yours.
Carol, thank you so very much. Yeah, that's exactly why we come here as well, to hear what's happening on the ground. There are about 450 clients, issuers, investors here at this Goldman Sachs conference. And I'm sitting with Chris Bonner, who is the U.S. head of leverage finance at Goldman Sachs. Leverage finance is one of the funnest places to follow because it's where the risk appetite really gets interesting. And with all that's going on, with the policy changes that you're seeing with the administration, the push-pull between the ability to get those tariffs done and the larger macro environment, really how much risk appetite is there right now?
Yeah, I mean, listen, I haven't heard many people say it's the most fun place to be, so I appreciate the opinion on that. All in all, thank you guys for making the effort to come to this. I think we're seeing risk appetite come back in. We saw 2024, we came through a huge volume of refinancing. Started 2025, we actually started to see the ability for M&A to pick back up, Q1 sequentially better than Q1 2024. Risk appetite coming back into the system. I think about Liberation Day and what's happened since then. Obviously, there's been a fair amount of uncertainty put back into the market. When I think about the credit markets in general, credit investors like stability. They don't like uncertainty. We have seen a little bit of a pullback. The good news is there's still plenty of cash in the system. The good news is investors are still looking to put dollars to work. But certainly on the margin, there's a little bit less risk appetite than we had pre-early April.
It's interesting. There are some deals still getting done to the tune of a few $1 billion here and there. I talked to one of your clients a little earlier, Shift4, for example. He gave us the demand that was under the surface for deals, the financing of a deal like his. It got done. It got done with excess demand. So what types of deals are investors willing to get into right now? What are they looking for?
So back to the theme of volatility, when you have something like early April happen and you do see levels move around pretty dramatically, I think the reality is, again, credit investors who like sort of sleep at night names, it just makes them be a little bit more discerning around what they're buying. That being said, as I said, there's plenty of dollars on the sideline. What gets those dollars to be deployed? People are looking for credits that they know, credits that they can model through a downturn, credits where they can answer the tariff question pretty easily. You know, credits that are sort of boring, for lack of a better term, right? Businesses that run very consistently, and again, you can sort of model the next 1, 3, and 5 years out. Shift4 is a great example of that. It was well received by the market because it checked a lot of the boxes that people were looking for at that time.
So what doesn't get done in this environment?
I mean, easy answer, but it's the opposite of what I just went through. You know, we're seeing a lot of names right now, and it's a nearly impossible question to answer. Obviously, news of the last 24 hours makes it, you know, a different variable that you have to play through, but hard to answer what the tariff question is. You know, the beauty of a conference like this is you have a lot of different opinions around here. You know, if we went and polled 20 people, we'd have 10 that said we're close to a recession and 10 that say we're a mile away from it. We'd have 10 that say rates are going up, and we have 10 that say rates are going down. You know, names like that are going to be susceptible to trends like those are just names that are having a harder time finding clearing levels. It's not that they won't, but the cost of capital premium for a name that's not right down the middle of the fairway is certainly elevated versus what we've seen in years past.
You know, typically I wake up in the morning and the first thing I look at is what the 10-year is doing, because of course it's been pretty volatile in the last couple of years. This year in particular, we're below 4.5%, but a lot of investors are worried about what it would mean if we got much higher, if we got toward 5%. What would that mean for a market like yours where there is just more risk baked into the credit?
Yeah, I mean, it's certainly a good question. You know, we think about sort of two components of interest rates, obviously the base rate being a component of it, the spread level being another piece of it. Spreads at almost all-time tights right now. Obviously, base rates moving around pretty dramatically. You know, people are doing that calculation, though, of, you know, some of the over-levered credits, some of the credits that have more adjustments than others, some where EBITDA has moved around a little bit more. If you have a prolonged period of elevated interest rates, you know, are those companies, for lack of a better description, able to service their debt, or are they going to run into troubles? Those are the kind of things that people are really thinking about right now. You know, again, I think the other side of it is spreads are very, very tight. And again, these sort of best-in-class credits continue to outperform even our baseline expectations, in spite of what's going on in the baseline treasury market.
I'm sure there's a level of frustration. I'll put it in personal terms. I got a mortgage at around 6.5% with a 5-year ARM, and I was excited for rates to go down.
Yep.
Doesn't look like it. And now I feel like instead of a journalist, I have to be a hedge fund manager. That is timing what those look like 5 years down the road. Now, if I'm a corporation, that must be much more frustrating. Where if you are waiting to refinance and the base rate is still relatively high, you might not be able to count on too many rate cuts this year.
Yep.
How do you figure out what refinancing looks like in the next couple of years when you don't know where long-term rates are going?
I mean, listen, we always have the statement of you're supposed to raise capital when you can, not when you need to. I think when you have these sort of shocks that we've had really during the month of April, it's a reminder to corporate America that, again, the market, while we had almost what felt like a sequentially improving environment in 2024, there is periods of time where the market's just shut down. And it's very hard to raise capital, not at any given rate, but just to raise it, period, full stop. What we're seeing right now, I think, as we look through May, you know, levels have sort of normalized again. You're seeing corporate America realize that, again, we're seeing these shocks in the market. I'm supposed to access the market where I can. And candidly, whether it costs you no incremental spread or another 25 basis points, it probably is not going to make a difference 3, 5, 10 years down the road. So go raise the money when you can right now. You always have the ability to refinance it in the future.
But how many of your clients are talking to you and saying, well, wait a minute, what is the average borrowing cost for them today? And where do you think it'll be in 5 years from now?
Yeah,
are they worried it'll be much higher?
Yeah, I mean, it's a great question. I think most are thinking around, you know, today is sort of the new normal. You know, we talk about why issuance levels have been somewhat depressed. I think part of that is just we haven't had stability, right? There hasn't been direction. If you have a market that just sort of settles in on a level, you're more likely to see issuance pop up. Again, it doesn't have to be the perfect environment. It just has to be a stable environment. I don't think most companies are thinking that 5 years down the road, this is exactly where we're going to be. Again, most companies are sort of paid to run their business and let the balance sheet sort of normalize over time. Focus on getting rid of maturities and getting rid of, honestly, most of last year's has been refinancing COVID-era debt. So get rid of maturities, get rid of elevated coupons that are naturally high, go run your business. The market levels are going to sort of dictate where they're going to be 3, 5, 10 years down the road.
Yeah, there's been a sense of delevering being a little bit of the name of the game. That is Chris Bonner. He's the U.S. head of leverage finance at Goldman Sachs, of course, running a very big conference here. Looking forward to bringing you back what I'm hearing on the ground, guys. Back to you.
All right, and we're looking forward to hearing it. Shonali, thank you so much. Of course, that is our Shonali Bosick. She is Bloomberg News global finance correspondent out there at Dana Point at the Goldman Sachs 10th Annual Leverage Finance and Credit Conference.
Hey, let's head on over to Charlie Pellet for a business flash because we are seeing stocks a little lower in the last few minutes. Hey there, Charlie.
Indeed, Tim. The word fluctuation, that's what's going on right now. We've got the Dow down 60 now, drop there of 0.1%. S&P holding on to a gain barely up 2 points right now. NASDAQ up 13 for the NASDAQ Composite Index. That is a gain of just about 0.1%. Lots of fast-moving news today. Traders facing slowing economic data and legal uncertainties around Donald Trump's trade war, despite solid results out of NVIDIA. NVIDIA up now by 2.7%. We've got the 10-year 4.43% with the 2-year 3.94%. Spot gold right now, we've got the precious metal trading higher by $31 the ounce, 33.19 on gold, up by 1%. West Texas Intermediate crude down 1.6%, 60.83 for a barrel of WTI. Bitcoin right now down 0.9%, 106,325 now on Bitcoin. United Airlines and JetBlue Airways have agreed to a far-reaching partnership that will allow travelers to use loyalty points and book flights across the two carriers. The agreement fulfills United CEO Scott Kirby's desire to secure flights at JFK at a time when air traffic control problems are hampering operations at Newark, the carrier's primary connection to the crucial New York market. Now, JetBlue shares, they are slumping today by 3.4%, UAL up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thanks so much. All right, so we talked earlier about the setback for President Trump and his tariff push. Those actions and threats of higher tariffs, as you know, have yet to be settled. We might get some more clarity. We'll see what happens tomorrow with maybe the Trump administration asking the Supreme Court to weigh in. I got to say, some already saying the train has left the station when it comes to the U.S.-China relationship, the impact that this kind of back and forth that we've seen, not just in the second Trump administration, Tim, but what we've seen over the last few years.
Let's bring in Elizabeth Economy. She's Hargrove Senior Fellow and co-chair of the program on the U.S., China, and the World at the Hoover Institution at Stanford University. She's author of many books, most recently, The World According to China. She joins us from New York City. When it comes to the relationship between the U.S. and China, the Trump administration this week announcing it would start revoking those Chinese student visas while also introducing new restrictions on the sales of chip design software and reportedly some jet engine parts to China. How would you describe the phase of a trade war or a trade negotiation that we're in with China?
I think we're still in a trade war. We had a tariff pause, a few weeks ago after Treasury Secretary Bessent and USTR Greer met with their Chinese counterparts, and we had that, terrific lowering, reducing of the tariff levels on both sides. And I think that led everybody to breathe a big sigh of relief. And we thought, maybe we were going to have stability in the relationship moving forward, at least, for the next 90 days, and perhaps some movement toward an actual, negotiation and agreement. But I think the Trump administration really divorced that set of discussions and negotiations from everything else that they wanted to get done with China. And I think what we've seen now is that means, no cessation of tough measures, whether, as you mentioned, is continuing, export controls or now this revocation of student visas. So I think we're still in the midst of a trade war. We're in the midst of a significant strategic decoupling. And all we had really was a tariff pause.
Hey, Elizabeth, what does the world look like with an increasingly decoupled U.S. and China?
I mean, I think it's going to be complicated. I think it's not going to be as straightforward as some people might imagine with, the U.S. and its allies and partners on one side and China and its partners on another side, because it doesn't actually have any formal allies except for North Korea. So I think it's not going to be that simple. And I think we've seen evidence of that, where President Trump went to the Middle East and came back with all these big announcements of new trade arrangements and investments and defense deals. And we just saw China this past week do the exact same thing and bring the countries from Southeast Asia into it and try to sort of bridge from the Middle East to Southeast Asia, sort of new trade and investment relations. And so I think it's going to be, everybody out to try to compete for partners and allies and strike the best deals. But there's not going to be that sort of decoupling of the world that I think probably the Trump administration has in its mind, because, for many and for most countries, quite frankly, China is their largest trading partner.
Right.
And while they don't want to lose the U.S. market, they're also not willing to sacrifice their trade and investment ties with China.
So what happened to the argument that we've said, okay, there's tensions, but let's not forget, people, these two countries, the two largest economies in the world, they still kind of need each other. Is that still the case?
I think within the Trump administration, there's a range of opinions. And I think it, goes from somebody like Peter Navarro, who would be perfectly happy to have not just a strategic decoupling, but really a complete decoupling of the two economies. I think the sort of on the national security side, most of the, cabinet members are quite hawkish when it comes to China. And then I think there are some in the administration, and maybe Treasury Secretary Bessent, maybe Commerce Secretary Lutnick, who see the benefits of trade and investment with China and have made very clear that, while the relationship is challenged, they want to continue to engage. They don't see anything past a strategic decoupling. They're not looking, and I think Secretary Bessent made that clear, they're not looking for a complete decoupling of the relationship. But it is fraught. And a lot of that has to do not just with what the Trump administration is trying to do now, but with what Xi Jinping has been doing, for 12 years as General Secretary of the Communist Party and President of the country, which is really challenging the United States, challenging the liberal rules-based international order on issues like, pushing to have the de-dollarization of the global economy, pushing for the end of the U.S.-led alliance system, pushing for a whole new definition of human rights. So there are some pretty substantive ways in which our two countries are in real conflict, but that doesn't mean we shouldn't continue to try to find areas of common ground and common purpose. And that, frankly, is what is entirely missing from this administration.
I'm trying to understand, and I think a lot of us are trying to understand the position that China can negotiate from right now. On the one hand, there's a consumer in China that's under pressure. The property crisis there, the economy has been under pressure, going really back to COVID. But at the same time, what we've learned is that in recent years, the country's made incredible strides when it comes to driverless car technology, EV technology, and some of the really high-tech stuff that, in fact, the U.S. is trying to prevent the proliferation of in China. What can you tell us about the position of strength or weakness that China can negotiate from right now?
Yeah, I mean, I think it was a fundamental miscalculation on the part of the Trump administration when they first began these negotiations. There's sort of an assumption that, in fact, because we import so much more from China than China imports from us, that somehow we had all the leverage. But the truth is, first of all, we have a much greater single source or sole source dependency on China for certain goods. So about 30% of the goods that we import from China, we are reliant for China for 70% or more of those goods globally. China doesn't have that with the United States. We've already seen China has spent 4 years now or more moving away from the United States, reducing their trade dependence since 2019, reducing their trade dependence on the United States from about 19% to now 14%. Our soybeans, right? Even after the tariff pause, China's not back to purchasing the same level of soybeans from American farmers. Brazil is more competitive, so they're purchasing their soybeans from Brazil. So one of the big dangers of this Trump-launched tariff war is that China was already on a path to its own form of strategic decoupling, and now it's just accelerated that process. So I think we misjudged, right, their dependence, their reliance on us. As you suggested, the Chinese economy is troubled. It has been since COVID. It hasn't bounced back. But China has the ability to suppress, right, the people in ways that the U.S. government does not. And at the same time, their entire innovation and advanced manufacturing ecosystem has just taken off after the past 4 years. And so you're really dealing with two different Chinese economies. And for the sake of the tariff war, we should be focused on the one that's most competitive in that tech and innovation space. And so we really need to focus on what we should be doing at home, investing in ourselves and moving ourselves forward, as opposed to simply trying to look backwards and trip China up with these tariffs.
Yeah, it's a tariff war, right? We should remind everybody that also this week, the administration seeking to block Huawei Technologies from selling advanced AI chips anywhere in the world, prompting an angry rebuke from Beijing. Elizabeth, it is about tech and tariffs. It's also, though, we had this week the Trump administration announcing it would start revoking Chinese student visas. So there's also that aspect that's going on. Who loses in that restriction? The U.S., Beijing, everybody?
Yeah, I mean, I think both sides lose, just like the tariff war. Both sides lose. I mean, truth be told, there are reasons to be concerned about some students, some Chinese students in the United States. And we saw a number of years ago where the U.S. sent back 1,000 Chinese students and postdocs who, had affiliations with Chinese military and technology universities and institutes, who were probably placed here by the Chinese government to access, advanced intellectual property from the labs that they were working in. So they weren't real graduate students or postdocs. We want to make sure that doesn't happen anymore. That being said, the vast majority of Chinese students are here to learn, to take advantage of the openness and the outstanding education that American institutions provide. A lot of the students that come here in the STEM fields end up staying and contributing in an outsized way to our own innovation ecosystem. I don't think we want to punish, these students. I think what we need to do is take our time and figure out how to use a scalpel to, review them before they get here and keep out the bad elements, but let in the vast majority of Chinese students who are such important contributors to our own success moving forward.
We're speaking with Elizabeth Economy, Hargrove Senior Fellow and Co-Chair of the Program on the U.S., China, and the World at the Hoover Institution at Stanford University. She's written many books, including The World According to China. Given your expertise in the area, I'm just curious, from your perspective, how you think we, as the United States, or if you were advising the Trump administration, how we should handle the relationship with China. What would you do?
That's a big question. I mean, to be frank, I served in the Biden administration in the Department of Commerce as a senior advisor to Secretary Raimondo for China. And so I actually think the Biden administration strategy was a pretty good one, right? Because it focused on first investing at home and making sure that our own innovation and advanced manufacturing, was up to speed. Chips and Science Act, the Inflation Reduction Act, the Bipartisan Infrastructure Law, all of these were about making sure that the U.S. was able to compete with China in the 21st century. We also had a vision that it was important to work with our allies and partners. Because nothing that we do alone is going to be sufficient to compete with China. If we put an export control, on a certain technology, odds are high that one or other of our allies might also have something similar. We need them on board to put controls on those same technologies if, in fact, they're not going to end up backfilling, right? So that just our industries suffer and somebody else makes money. But the way the Trump administration is operating, it's hardly likely that our allies and partners are going to be excited to work with us because, everything we're doing to China, or not everything, but a lot of things we're doing to China, we're also doing to them. And then there was an element of modernizing our defensive economic tools so that we could protect ourselves, our national economic security. So yes, let's think about making sure we're not too dependent on China for critical minerals and rare earth elements and the processing of those things. Let's make sure we're not too dependent on them for any critical technologies, for personal protective equipment that we needed during COVID. I think that's smart policy, and the Trump administration is going to continue that.
Elizabeth,
but above all, also try to maintain channels of communication and to continue to try to find areas where we could work with China. Because through all of this, right, we don't want this conflict to devolve into kinetic conflict. And if we're not talking, if we're not trying to work together, the likelihood of that happening just increases.
Your book, The World According to China, that was out about 3.5, 4 years ago, I believe, right? 2021. When you look at the next 50 years, 100 years, is it going to be better for China or better for the U.S.? And forgive me, but just about 35 seconds here.
Okay, I'm always going to be bullish on the United States. So I think if we get it right, and I think if we
Is that your heart speaking or your head speaking?
Yeah, no, I think, listen, China has some pretty fundamental challenges, and we haven't had a chance to talk about these on this particular show, but there are some deep-seated, deep-rooted issues that the Chinese government is confronting.
Yeah.
We only lose if we continue to do what we're doing right now, which is reduce uncertainty and chaos into the system.
Elizabeth Economy, thank you so much. So appreciated. Hey, still to come, we're going to get a check on NVIDIA. Stock is up. What you need to know. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed day, and actually an up day right now for the Dow, the S&P, and NASDAQ. I'll tell you, the Dow's been all over the map today, swinging between gains and losses. But right now, we're looking at an advance of 52 points on the Dow, up by about 0.1%. S&P higher by 14, up now by roughly 0.2%. NASDAQ up 0.2%. The Bloomberg Mag 7 Index, of which NVIDIA is a member, the index is up by 0.4%. NVIDIA shares after earnings up now by 3.2%. Your 10-year 4.42%, with the 2-year currently yielding 3.93%. Gold up $32 the ounce, up by 1%, $33.19 where we stand on the precious metal. And West Texas Intermediate crude $60.98 a barrel, down now by 1.4%. Lots of retailers out with earnings. Best Buy today down 8.3%. Kohl's stores after earnings down 2.5%. Foot Locker down by 0.1%. Foot Locker, of course, being acquired by Dick's Sporting Goods. Dick's Sporting Goods up now by 1.5%. Recapping clean sweep, the Dow, the S&P, NASDAQ all higher. S&P up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. You're up to date on the markets on this Thursday. Want to talk a little bit about what's going on with NVIDIA, because a little bit more. The stock's been up as much as 6.5% today. Right now, a gain of about 3.2%. Company sales in the first quarter, they rose 69% to $44.1 billion, driven by its dominance in AI accelerators and really a broadening lineup of hardware and software products. It didn't hurt either to hear the company's CEO Jensen Huang soothe investor fears about a China slowdown by delivering that solid sales forecast, and also saying that the AI computing market is still poised for, quote unquote, exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
That's Jensen Huang last night to our own Ed Ludlow a little earlier. With more on NVIDIA is a Bloomberg News U.S. semiconductor and networking reporter Ian King. He joins us from the San Francisco Bureau. Ian, I want to talk a little bit about what we heard from Jensen there, but before we do that, I just want to get a clear understanding from you about where exactly NVIDIA made up for concern around China, because that was a big question moving in to the earnings yesterday, and then also with regard to the restrictions that have been placed on the company by the Trump administration with regard to the H20 chip. Where did NVIDIA make up for this?
Yeah, no, you're asking the right question here. In many respects, it was a kind of a bizarre announcement and reaction. They said, look, things in China were worse than you thought, right? And are going to continue to be worse than you thought. We're going to lose $8 billion of revenue from China. So clearly, well, but why aren't your earnings that bad then? And the answer was, because everything else is good, right? Networking came back. That had been a slightly weak spot a quarter ago. The new Blackwell range-based products, getting more supply of that. Things are going a lot better there. Demand is really going very well. And they talked about the spread of their technology into the enterprise, to robotics, to automotive, but that was a bit more sort of longer term. The bottom line here is that the big spenders on this technology, the Microsofts, the Amazons, are still spending.
Thank God, right, for the hyperscalers. Ian, is it broadening out, though, beyond that? I think there was a lot of wondering about the tier 2 companies, the sovereign play here, which provides potential, lots of potential, maybe for NVIDIA going forward. Do we get anything on that?
Yeah, in a word, no. We got plenty on it, but it's not broadening out. 50% of their data center business was still these so-called hyperscalers. I mean, they talked a lot about it broadening out and finding its way into other parts of the economy. And I guess you could say that, well, maybe enterprises, you know, the corporations, governments, service providers are using more of the cloud services so that the use of AI is broadening. But in terms of the revenue makeup, that's still very solidly going to these so-called hyperscalers. And I think long-term investors want to see that 50% ratio go considerably lower to have a real assurance that everybody's putting this gear in their own data centers and their own nationalized, centers before they'll become more comfortable with that idea.
I'm curious if, in your view, NVIDIA's moat when it comes to the technology that it has is getting any more shallow right now, or if it's getting deeper. We did speak in our coverage yesterday to some folks who reminded us that a company such as Alphabet's Google is creating their own technology that helps them rely less on a company such as NVIDIA. How is NVIDIA's moat right now?
A couple of ways to look at it. The numbers would indicate that nobody's even getting close, right? It's outgrowing everybody. I mean, the revenue it gave up in China is more than the total revenue for AMD, which is purportedly its nearest competitor, right? So scale-wise, forget about it, right? But, you played a bit of the interview with Ed Ludlow. Part of that interview, what Jensen said was, look, Huawei, which is the Chinese technology company that the US government has gone to great lengths to kind of lock out of the world, is fielding a chip now which is pretty much as good as our H200. And you'll remember, up until earlier this year, H200 was the best thing that NVIDIA had. So he was cautioning that, our absence in China is actually fueling competition there, and they are doing a lot better than you thought they were doing.
Well, so help me understand, because I thought when these headlines, I'm trying to understand, they are saying that they're considering trying to design a new chip for the Chinese market. As we know, the administration has, kind of slowed some of certainly the more sophisticated chips. At the same time, executives, from what we understand from the conference call at NVIDIA, are spending a lot of time reaching out to the government to lift some of these restrictions. So help me understand, does it sound like NVIDIA expects that China will reopen? Or I don't know, I'm just trying to understand if that is going to be more of a healthier revenue stream for them going forward.
Yeah, so that was a very, that's the right question that everybody is asking, and it was asked explicitly and implicitly in a number of ways on the conference call. What NVIDIA said was, look, sure, we'd like to have another solution. We'd like to go back to doing what we did, which was find a way to get a chip that does not trigger these restrictions. But frankly, these restrictions are so stringent at this point. Is there a point in doing that? Is there a way that we can do this technically and have a chip in China, which the Chinese want, and doesn't raise the ire of our government? And they thought they'd done that with the H20, and they thought that perhaps the Trump administration might take a different line to the Biden administration, but they didn't. They doubled down on that policy, and they said, no, you can't even have the H20, which is, a weakling younger brother of the H200 we just talked about. So is there any point was part of what the question, part of the answer that they gave.
Ian, in your view, and maybe not in your view, but in the view of some of the folks you speak to when you're doing your reporting, does a restriction such as this actually help push China to develop its own technology?
I mean, it already has done, right? I mean, Jensen said that. I mean, you could argue it's in his interest to create a scare that would persuade people to come to his point of view. But there's no denying that there are large-scale deployments now of Huawei chips.
Hey, real quickly before we go, out there today, too, Republican Senator Jim Banks and Democrat Elizabeth Warren are demanding answers from Jensen Huang on NVIDIA's plans to actually open up a research facility in Shanghai. And they are, of course, citing national security and economic security concerns. Should we be scratching our head on that, considering the backdrop between U.S. and China right now?
Yeah, I mean, I don't want to be rude about our competition, but they perhaps need to work a little bit harder on that one. NVIDIA, this is already asked and answered. This is a new office, an office to help people to return to work. NVIDIA has said publicly nothing to do with a research and design center, and so perhaps those politicians better not read everything that is written out there. Perhaps they want to check on the reporting.
Thank you for that. And we appreciate that, because we were trying to get some clarification as well. And so it's why we go to you. Ian King, thank you. U.S. Semiconductor and Networking reporter at Bloomberg News out there in our San Francisco bureau.
Hey, taking a look at markets right now, just over an hour away from the close of equity market trading here. The Dow up right now, close to 0.2%. The S&P 500 up 0.3%. The NASDAQ Composite higher right now by 0.2%.
All right. There's your update on trading. When we come back, though, we're going to highlight some of the stocks on the move on this Thursday. Bloomberg Business Week Daily continues in just a moment.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're just coming up on 1 hour left in today's trading session, about an hour and 6.5 minutes to be exact, which we like to be. Having said that, you're looking at the S&P 500, just up about 17 points, 0.3% to the upside, gain of about 0.2% on the Dow Jones Industrial Average, if that's the index you like to focus on. Some do. Up about 20 points, up about 0.1%.
I'm Tim Stenovec along with Carol Masser. I'm joined right now by Red Brown. He's Bloomberg News earnings reporter for Stocks on the Move today. Red, a lot of red on the screen. What's going on?
Yes, there is a lot of. I have to pick all the stocks.
I didn't even mean to do that.
Yeah,
it happens all the time.
But there you went. There you went.
We'll let it slide. Speaking of sliding, we have Best Buy is down around 8% today. Last time I checked, that was the most in the S&P 500. This is a company that everyone knew was going to be hit by tariffs once they were announced. This move today is the worst intraday actually since around when tariffs were hit. And today is really coming down to another week earnings report from the company. They cut their full year sales outlook, and that's coming down to a little bit because of the weaker demand that we've seen a lot of the retail companies come out and say that tariffs are kind of in the uncertainty, of course, everyone's favorite word, is kind of causing within consumers. So yeah, that's kind of explaining the move today. I think it's really kind of interesting the move is so aggressive considering the news that we got from tariffs. It doesn't seem like traders are really giving them any slack or kind of expecting that the tariffs won't be as prevalent going forward. And I think that also has to do with just where Best Buy is. We're not really seeing a lot of growth trajectory for the company in general. So a couple of kind of compounding issues for Best Buy.
Yeah, Best Buy ticker BBY. Still, Carol, a $14 billion company. Down 24% so far this year, 23%.
Totally, but it is the analyst commentary is not terrible, right?
No, I think they were actually kind of happy.
Worse?
Yeah, they were saying that kind of the sales did shrink, but maybe not. It was worse than consensus, but I think there are some analysts within that consensus that were saying a little bit better than expected. I think things like iPhones, laptops performed pretty well. That could be due to consumers pulling forward their demand. We've heard that quite a bit as well. But yeah, overall, not a ton of enthusiasm for Best Buy, at least from the buy side.
We continue the negative tour, the downside tour.
I said.
I know.
It's all red.
Sorry I'm so grim today. Yes, next one that we can take a look at would be Salesforce, another company that announced earnings. This one there was a lot of positives to take out. They had, they posted results that were in general stronger than expected, but with AI, it becomes the focus for a lot of these companies, these software companies, and the AI results weren't as compelling, I think, for Salesforce. The reason being is they've launched their own AI tool called Agentforce in October, and I think the market was hoping to see a little bit more of an aggressive growth for that particular tool. It's coming up against competition from ServiceNow and Microsoft for these sort of artificial intelligence agents that help with, your Salesforce, things like that. So yeah, the business only grew by around $100 million, which is a lot, but apparently not enough for the market today.
All right, Salesforce ticker CRM. Finally, Uber. Shares also in the red, ticker Uber.
Yes, shares down around a little over 5%, and this is not an earnings story. This is more of a competition story. It seems to be trading down because of Elon Musk announcing that Tesla will be launching robotaxis in Austin within 2 weeks.
This is so confusing to me.
Yeah, I'm confused.
Why is that?
Why is Uber? Why?
Well, okay. I mean, look. At the core of the story, every time you and I speak to somebody who's jumped in a Waymo in San Francisco or in Arizona where you were, why would I get into a car with a driver if I can do this?
Right. Love the Waymo ride.
But on the other side of this, hasn't Uber partnered with some of these driverless tech companies such as Waymo in some cities?
Yeah, no, I mean, I just getting ready for this to speak with you guys, I was kind of I wasn't appreciating just how big the market is and how much work Uber has done. I think maybe the problem might be, or the hesitancy might be that, Tesla is going to be a major player in this, right? Like a lot of the stock is predicated on the robotaxis being successful. Elon Musk has said we're going to be big in robotaxis. So it's just a major competitor for Uber.
Like you do wonder at some point, right? Do they stop having those partnerships because Tesla's doing it, like everybody's doing it on their own? Like who have they partnered with?
They've partnered with Waymo, and they've partnered with roughly a dozen manufacturers. They've also invested in self-driving tech companies.
So
but
how does that
remember, Uber had a self-driving car unit under previous CEO and co-founder Travis Kalanick years and years ago. They ended up selling that off years ago because it was just so much money that they were investing. But they were working on this tech. They've been working on this tech for years. They're not working on it the same way that they used to.
Okay. I don't know.
Yeah.
I don't know.
Have you done a Waymo yet?
No, I don't think I would feel comfortable.
It's so cool.
You would feel fine.
Really?
I would have closed my eyes.
You would have.
It was at night. He got me going. And this one, I never thought, because he's like, you don't love car rides.
No, I don't like
As a
car rides.
passenger.
Hence why I live in New York City.
And you loved it.
Yeah, it was great.
Was it just like the novelty of it was exciting?
No, it was the safety of it, the ease of use, the cleanliness, it was great.
Clean. It was. You got to try it.
Yeah.
Just promise us you will do that.
I'll give it a go.
All right, Red Brown there, Bloomberg News earnings reporter. For more conversations like this, check out our Stock Movers podcast. 5-minute episodes, winners, losers, gainers, decliners in the stock market. You can find it at Apple, Spotify, or anywhere you get your podcasts. For those watching on TV, the close is coming your way. Do not go anywhere, though. Bloomberg Business Week Daily continues with Tim and me right here on Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Trump administration is waiting for word on whether Hamas will accept the latest ceasefire plan put forward by the U.S. At the White House, Press Secretary Caroline Leavitt.
Special Envoy Witkoff and the president submitted a ceasefire proposal to Hamas that Israel backed and supported. Israel signed off on this proposal before it was sent to Hamas. I can also confirm that those discussions are continuing.
CBS News contributor Robert Berger says Israel's killing of a Hamas leader may move things forward.
In Israeli circles, Mohammed Sinwar, who was the de facto leader of Hamas after his brother Yahya was assassinated last year, was considered even more radical than Yahya Sinwar and also an obstacle to a hostage deal. So the hope is that now Hamas, and everybody's waiting for their response, that they'll agree to this ceasefire.
The White House said today it will fight court rulings banning the president's tariffs. The Treasury Department confirmed today that Chair Jerome Powell met with President Trump. CBS's Natalie Brand has that.
President Trump told Powell that he thinks he's making a mistake by not cutting interest rates. Powell trying to stress in this meeting that the Fed is independent, not supposed to be subject to that kind of political pressure.
Harvard graduates celebrated commencement today with the threat of a ban on foreign students hanging over the university. A judge today extended an order banning the Trump administration from going through with that. Legal analyst Laurie Levinson.
Foreign students are incredibly important to Harvard as they are to other institutions. So if it turns out that international students cannot get visas to study at Harvard, that will have a dramatic impact on Harvard's enrollment and on its funding.
Secretary of State Marco Rubio threatened yesterday to revoke the visas of Chinese students as U.S.-China relations deteriorate. Ian Ozan in New Orleans has the latest on the search for 2 remaining jail escapees and an increase in the reward money.
It's $50,000 per remaining fugitive.
Louisiana State Police Superintendent Robert Hodges says authorities are getting tips that are helping them close in on Antoine Massey and Derek Groves. Crime Stoppers of Greater New Orleans CEO Darlene Costanza says the reward money is motivating people to call in those tips.
We know that tips from the public plays an incredible role, and we also appreciate that we have the trust coming to Crime Stoppers for those tips. But our work is not done.
Ian Ozan for CBS News, New Orleans.
On Wall Street, investors are still trying to digest the latest trade policy confusion. The Dow currently up 71 points. This is CBS News. Astronomers have discovered a strange new object in our Milky Way galaxy.
The celestial object is emitting X-rays around the same time it's shooting out radio waves in a way that's never been observed before. During periods of extreme activity, that cycle repeats every 44 minutes. The object is 15,000 light years away, and scientists say it could be a star, pair of stars, or something else entirely. NASA's Chandra X-ray Observatory spotted the X-ray emissions by chance last year while focusing on the remains of an exploded star. Steve Kathan, CBS News.
CEOs are raking it in more these days. The typical compensation package for chief executives who run companies in the S&P 500 jumped nearly 10% last year as corporate profits rose. On the other side, AP's annual pay survey found workers at the middle of the company's pay scale would generally need 192 years to catch up. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are continuing on Bloomberg Business Week Daily. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Brokers studio. And we got a little bit of a rally underway. Definitely off our worst levels of the session, off our best levels of the session as well. But up about 15 on the Dow and the NASDAQ 100 up about. I don't know.
This is a rally? Okay.
I'd call it.
We'll see what
kind of limping along.
I'm going to see how Charlie Pellet describes it in a few minutes.
Okay.
Just compare notes. I'm just going to compare notes.
It's not a rally.
Okay. Call it what it is.
I stand corrected.
Okay. Hey, we have a great program coming up. Something that is super interesting that hit early this morning, a new partnership in aviation. George Ferguson of Bloomberg Intelligence is going to break it down for us. Is it all about the airports, Carol?
Can a merger be far behind? That's my big question.
Ooh, really good question. Also, Costco earnings and more. We're going all in on retail with Bert Flickinger, Managing Director of Strategic Research Group.
And listen, we like to go global, as you know. We're curious about what global central bankers are thinking and what they're doing. Later on, we've got a conversation with the Bank of England Governor Andrew Bailey. We'll get to that a little bit later on. First up, though, let's get to the markets. Let's see if Charlie uses the R word. I'm guessing he's not.
I'm not. Move higher. I'm playing it safe for you guys. And just wanted to update you on what's going on with JetBlue and UAL. That's a pair of stocks you guys were alluding to. JetBlue shares surprisingly moving lower by 3.5%. We've got UAL up by 1.3%. Our George Ferguson is going to have a whole lot more on this partnership coming up right here on Bloomberg Business Week Daily. But the markets, yes, move higher with the S&P 500 index up by 9 points right now. That is a gain of 0.2%. The Dow up 44, higher by 0.1%. NASDAQ up 25, a gain there of 0.1%. Bloomberg Mag 7 index did see the R word earlier on, a rally there, but right now up by about 0.4%. We've got the 10-year yielding 4.42%. Should point out that NVIDIA, by the way, a member of our Mag 7, up by 3%. The 2-year 3.94%. Gold up 1% right now. The precious metal 33.20 the ounce on spot gold. West Texas Intermediate crude down 1.5%, 60.93 for a barrel of WTI. White House trade advisor Peter Navarro says there is no question the U.S. is in an economic emergency to invoke the International Economic Powers Act. His comments came in a Bloomberg interview a day after a 3-judge panel for the U.S. Court of International Trade blocked many of President Trump's tariffs on imports from dozens of countries, declaring them illegal.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
White House trade advisor Peter Navarro. You can hear and watch the full conversation with Navarro on YouTube on the Bloomberg podcast channel. Let's talk about some of the stocks that are moving today following earnings. We've got NVIDIA up now by 3%. C3AI surging 24%. Salesforce after earnings down now by 3.7%. Hewlett-Packard Inc. down by 8.5%. Bottom line here, S&P 500 index moving higher. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Some big news in the world of aviation. United and JetBlue have agreed to a far-reaching partnership that will allow travelers to use loyalty points and book flights across the two carriers. United shares are higher earlier in the session. JetBlue shares initially were higher. Now they're down about 3.5%. George Ferguson is Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. George, is this partnership all about United getting back to JFK as it looks to diversify from Newark and JetBlue getting to Newark? Is that what this is about?
Yeah, so this partnership may be an entree to something else. I don't know that it's a merger. I'm not sure that the Trump administration, even with probably its relaxed standards compared to the Biden administration, would let these two carriers combine. But I mean, really, what I see out of this is that they're each going to get a chance to try a little bit of each other's core markets, right? So United picks up, I think it was 7 slots out at JFK. It doesn't happen until 2027. JFK is really dominated by Delta. And, you know, when you're a dominant carrier like Delta, especially in a nice long-haul market like JFK, you usually get above-average fares out of it. And so United, when they grow their presence over there, could probably pick off some pretty nice fares, not as good as Delta, but pretty nice fares. And it diversifies them a little bit, but not a lot. And I think JetBlue gets a chance, I think, to fill some United airplanes, given you can book through each other's apps and such. So that probably helps JetBlue out a bit there. And then JetBlue gets a little bit of Newark, where Spirit really dominates. And so it helps diversify, again, Newark a little bit. Spirit probably gets above average fares because of that. So I think it helps them there too. But I think really it's more in United's favor than JetBlue's.
Is it about the problems at Newark, or was this probably in the making?
You know, I don't think it is about the problems in Newark. Okay. Like I said, I think it's really about each one is getting, I think, a spoonful of the other's ice cream. They want to, you know, get a little bit of that other market and pick up some nice fares. But it's not a lot. There's not a lot of, you know, changing hands here.
Hey, I just want to bring everybody an update. Trump tariff ruling temporarily paused by an appeals court, which means essentially that the appeals court has allowed President Trump's tariffs to stay in effect for now. I know Carol's doing some digging to see if we have any other details on this. That's a headline crossing the Bloomberg terminal right now.
No, but it's certainly been top of mind at this point, and so we'll see what happens maybe as a next step. But it does sound like it gives the Trump administration some time to figure out their next step and where it goes.
So, George, it raises the question not about the tariffs specifically, but going back to this United and JetBlue partnership. We talked about the airports. We talked about a potential marriage of some sort, perhaps, maybe, somewhere down the line. Are there regulatory issues here, though? Because I can't help but think of the challenges that this company had, JetBlue, that is, with an American Airlines partnership.
Yeah. So initially, I don't think there's much of any regulatory issues. They're not going to manage schedules jointly. So everybody's going to, each of the airlines is going to be in sort of their own decision-making mode. And again, because I think the numbers are small here, I just don't see any major regulatory issues with this, if there is any regulatory.
Why was there an issue with the American Airlines partnership that JetBlue had?
Because they were coordinating schedules, right? So they were acting sort of as a combined entity out of the Northeast in that Northeast Alliance. And the Biden administration was a bit more aggressive about allowing airlines to do it. I think there's always a lot of sensitivity in the country about airfares. And so I think it's always actually a political challenge for administrations. And so I think the Biden administration wanted to look like they were trying to maintain a healthy amount of competition in the industry.
I can't help but think of the challenges that JetBlue has had over the last couple of years, the attempt at a turnaround, the attempt to merge with Spirit Airlines that obviously did not actually happen. George, does JetBlue need this partnership more than United needs it?
So I think it does, right? And I think one of the things it does for JetBlue, right? JetBlue just can't offer their customer base a global reach. They've got some alliances they try to do it with. This will help, because you're in a world now where every airline is really trying to make customers sort of commit to them, right? They get you, if you want to fly in their airplanes, and you're not buying into a business class seat and you want to be able to check bags at no fee or a reasonable fee and pick your seat and blah, 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 you better have their credit card in your hands, right? And they're making a lot of money off these credit card fees. And so in that kind of world, would you be a JetBlue loyalty member if you're out of Kennedy, or would you be a Delta loyalty member? Because Delta's going to take you more places around the world, right? Especially you're going to take the family to Europe for vacation, do a bunch of business flying. JetBlue doesn't really fit that mold for you. And so I think they do need something like this.
So does it make anybody else in the industry say, okay, maybe we have to strengthen partnerships or do something? Is this, the kind of action that creates a reaction by somebody else in the industry, George?
Oh, to me, the two key ones that have to do this are Alaska, which we've already seen it. They do have a partnership with American, and JetBlue, because both of them are sort of regional carriers with premium offerings, but they, again, don't span the globe, don't even span the country fully. So they really need partnerships like this to make sure their product is as palatable to all their customers. I think when you get below them, sort of the lower cost carriers, it's just all about the seat price. You might be a loyalty member. Maybe you're sort of you're more of an economy flyer, but I think it matters less to them.
All right, I got to ask you, what's the future of JetBlue? Stock's down almost 40% year to date. I know the whole sector is, but this one's down a lot. It's a $5 stock. I felt like there was a point, George, go back now, I don't know, 10 years or so, it was really just like the airline everybody looked to, right? And we've talked with you a lot about, it didn't have the legacy issues. Well, now it has some legacy issues. Like, it's a different environment. What do you see as the way forward for JetBlue?
I think short of merging with an airline that might be of comparable size, and filling out that, at least U.S. domestic route network, I think it is a purchase by somebody, because they live in this world again, where they offer premium. Sorry, go ahead.
Like who? If Spirit, what doesn't work with Spirit, who would it work with?
I feel like potentially like an Alaska is a similar size. You could probably get that through, a Trump administration. I feel like anything larger than that, you're going to hear a lot of howls about consolidation in the U.S. airline industry. Spirit wouldn't have been that bad, and maybe it could have occurred in this administration. Cultures were pretty different, but I think there's that one. It's it's Alaska, but again, you have challenges there. They fly different types of fleets. One's a Boeing flyer, one's an Airbus flyer. You'd have to do a lot of fleet management. Yeah. But I think they need to get larger and have more across the country coverage in order to really.
We'll see if it happens. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, joining us from New Jersey. Always appreciate your time, George.
United up about 1%, JetBlue down almost 4%. Hey, just to remind you, a federal appeals court temporarily paused a ruling against President Trump's global tariffs while weighing a longer-lasting hold. A brief order granting the stay was issued today by the U.S. Court of Appeals for the Federal Circuit. So, again, continuing to watch it, and we'll look for some new developments. All right, folks, you are listening and watching Bloomberg Business Week Daily. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Brokers studio. We're talking a little AI, aren't we?
Yeah, the founder, chairman, and CEO of the AI data management platform Reltio is up next. This is Bloomberg Business Week Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. ShipStation.com with the code Bloomberg. Repeating our top story, a federal appeals court has temporarily paused that ruling against President Trump's global tariffs while weighing a longer-lasting hold. A brief order granting the stay was issued today by the U.S. Court of Appeals for the Federal Circuit. Stay with Bloomberg for the latest on this developing story. And, of course, Balance of Power will be up to the minute with coverage right here on Bloomberg. Right now, we are looking at an update for the Dow, the S&P, and NASDAQ. We've got just about 38 minutes to go until the closing bell. S&P right now up 15, up by about 0.3%. The Dow up 66, up 0.2%. NASDAQ up 0.3%. The 10-year, 4.42%, with the 2-year, 3.94%. Gold up 1%, 33.19 the ounce. West Texas Intermediate crude down 1.4%, 60.96 for a barrel of WTI. Now, what about the economic backdrop? Anastasia Amoroso is Chief Investment Strategist at iCapital, and she was interviewed this morning on Bloomberg Surveillance.
Instead, we've front-loaded our purchases. Instead, we've actually seen an uptick in manufacturing. We've seen a sharp reversal in consumer confidence. And so all of that now leaves us tracking 2.3% GDP growth in the second quarter. How bad is that for the U.S. economy? That's pretty great. It's pretty great for markets.
Anastasia Amoroso, Chief Investment Strategist at iCapital, interviewed this morning on Bloomberg Surveillance. Among the names coming up after the close of trading, a lot more earnings: Costco, Dell, Marvell Technology, and Zscaler. Again, recapping, S&P up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week Daily, our Bloomberg Tech Today conversation brought to you by Cisco. AI moves fast, and the path forward isn't always clear. At Cisco, giving you the infrastructure, security, and observability to stay on course. Cisco, making AI work for you. Visit cisco.com/AI for more.
Reltio is a venture capital-backed AI-powered data platform that counts companies including Pfizer, Neiman Marcus, CarMax, Petco, Warner Brothers Discovery, and more as clients. We've got with us Manish Sood, founder, chairman, and CEO of Reltio, joining us from Redwood City, California. Manish, it's a private company with backers including Sapphire Ventures, Crosslink Capital, and more. The valuation of the last round, around $1.7 billion. I think it's fair to say customers who are use products from Neiman Marcus or CarMax or Petco and the like, they don't see what Reltio does behind the scenes. So explain to us how you analyze companies' data and what it can do for them.
Tim, thanks for having me on the show. Reltio is focused on unifying data from across multiple sources. If you think about the current state of the enterprise, they have hundreds of different applications that are being used at any given point in time today. And it's become really difficult for these organizations to figure out if they have the right information about their customers, products, suppliers, asset, locations, these things that are critical to running their business operations. And that's where Reltio comes in, where we take in information from all these contributing sources, existing applications, legacy infrastructure, create a unified view of the information that your business runs on, and provide that for faster decisions, easier ways to engage with the end audience that you're working with, which results for these companies for faster growth, better compliance and security, and as well as making sure that they're optimizing the cost footprint, especially in the world of this massive sprawl of data that they're starting to see.
Manish, it does seem like a pretty crowded market. I mean, Informatica comes to mind, given the news that we got this week about the Salesforce acquisition. Prophecy is also another company that seems to me like it is in your space. How do you differentiate yourself from competitors?
Reltio, from the very beginning, has been focused on the real-time data intelligence that we can provide. And this means providing the intelligence in milliseconds orientation, especially because our belief from the very beginning has been that this kind of data about customer, product, supplier needs to be used at the point of engagement to influence the experience that you're delivering as an organization. And that's where speed matters. And one of the key differentiators for us is to be able to do this at speed with scale, for customers who are managing billions of profiles, all the way to customers who are managing very complex orientation of data inside their own businesses, and being able to do it, with a faster speed, rate, and pace. And from the very beginning, we have been cloud native, built for AI consumption, and optimizing the business processes further.
So on a day where we're all kind of obsessed with NVIDIA's earnings and the day after, and what it says about the AI race, it seems like people are upbeat. We know the hyperscalers that are the bulk of NVIDIA's business, be it Microsoft and Meta and some others. What's your narrative? From your vantage point, your perspective, what's the narrative you have around AI and the ramp up?
Look, AI is a fundamentally different building block compared to everything else that has existed so far in the enterprise technology stack. And what this building block allows us to do is to re-envision how some of these applications will be reimagined, how this will lead to an entire transformation in the enterprise tech stack. But the key ingredients for that transformation to take place is going to be the data, the strategic asset that we keep talking about, especially in the enterprise context. This is the data, when you think about it, that informs the AI's ability to deliver faster outcomes. And this is where the AI capabilities that we are all, so excited about, there are infrastructure providers, NVIDIA, all the cloud hyperscalers, but now is the time to start building the new version of the enterprise with the combination of data and AI. And that's really exciting overall for the entire industry.
I love when we talk with someone like you because, you guys work with companies like L'Oreal, Pfizer, HP, CarMax, and so many more. So when L'Oreal comes to you, what are you doing for them specifically? Or CarMax comes to you, what are you doing for them specifically?
Let's take CarMax as an example. When you think about their business, think about the data that is most critical for them to be able to buy cars, sell cars, service them, engage with you as a customer. They are trying to understand across all the different ways of engagement that they have, how they can provide the right quote at the right point in time, or the right offer when you are ready to buy a car, and do all of this with the guarantee that you can be done with the entire car buying or car selling experience in less than 15 minutes without the need to haggle. In order to deliver that kind of an experience, they need to have each one of their business processes, every application that they use, to be informed with the right data about the consumers that they're working with, as well as the vehicles that they are transacting on. And that is how, by bringing all the information together from all the disparate sources, both first party and third party sources that they procure information from, they're trying to assemble a unified 360-degree view of not just the customer that they're working with, but also all the vehicles that exist in the US, because that is the capability that allows them to inform their split-second decisions on how they will price a vehicle or how they will want to engage with you in the best manner possible to create the optimal experience. And all of this data about the vehicle and the customers is being managed inside Reltio. It is informing every decision in milliseconds.
Manish, got to leave it there. Manish Sood, founder, chairman, and CEO of Reltio, joining us from Redwood City, California. Manish, you got to come back. Keep us updated. Do appreciate you taking the time. Carol, back to an update on a story that we talked about at the top of our 2 p.m. hour.
Yeah, let's get to it. About a court blocking President Trump's global tariffs. That was the main story. It started coming last night. We've, of course, into the morning. The Trump administration looking to get a block on that. let's get the latest on the latest legal action, because it looks like they did get a block on that. Bloomberg News U.S. legal reporter Eric Larson, it's a busy day for him. He's back in our Bloomberg Interactive Broker studio. So, Eric, the headline was a federal appeals court temporarily pausing a ruling against President Trump's global tariffs while weighing a longer lasting hold. So what just legally happened? What court? Help us.
So this was a ruling from a federal appeals court in Washington called the Court of Appeals for the Federal Circuit. It handles cases like this.
Is this an important court in the stacking of courts?
Yes, it handles a little more wonky political stuff.
Okay.
But suffice it to say that this is a temporary stay, as you noted. It's called an administrative stay, not to get too wonky, but that just means...
wonky, because we want to understand this.
Okay, so that just means that they looked at Trump's request for a stay pending appeal, and that request also said, hey, while you're considering this stay pending appeal, why don't you go ahead and issue a very brief administrative stay that just immediately puts this on hold while you consider a longer lasting stay. So right at this moment, the trade court that issued this sweeping, kind of shocking decision last night, blocking these tariffs, finding them illegal, that is currently paused while the court considers whether to issue a longer lasting stay pending appeal.
Sorry, go ahead.
I was just going to say, the administration had said that they were prepared to go to the Supreme Court directly if they didn't get some sort of action like this, because it is.
Is this like, I'm going to go to mom and ask, or I'm going to go to dad and
Well, that's exactly what I was going to ask, Eric. Does it mean that the president, will not go to the Supreme Court tomorrow, as they said they would?
It looks like it's more likely that he won't, just because he does now have this stay, but that doesn't mean that he won't go soon. If he doesn't get the stay pending appeal that he wants, you could expect Trump to go to the Supreme Court on that. Maybe that just means it doesn't happen tomorrow.
But don't they need an official ruling so they can move beyond this and decide which avenue they want to go when it comes to implementing these tariffs?
Right. So that could involve a whole case where there would be, arguments in courts, big briefing by both sides, and where the appeals court that just issued this decision, where they would put down a ruling on the merits to say whether or not the trade court's decision was correct or not. And that's going to take some time for a case like that to carry on. But right now we know that the administration was given a 10-day window, a deadline to start implementing the unwinding of the tariffs. So it's a little more urgency here for both sides.
So help me understand. I never quite sometimes understand the legal process, or maybe it's set up to be this way. Rulings can happen and you could say, well, wait a minute, maybe that ruling wasn't right. So if the federal appeals court blocked President Trump's global tariffs, they ruled that. Like, how many times do we get, I guess, the process that the administration can appeal it once, right? And then that court's going to come with another decision, and then is that the final decision? Or can the folks that originally got the decision to block his global tariffs can then come back again?
Well, I mean, we see that with a lot of cases involving.
I don't have a law degree, as you can tell. So help me understand.
So what you can have is multiple stages of appeals, because right now this is a fight over a stay pending appeal, but a lot of times you'll see in cases where there have been injunctions issued against Trump's executive orders or things like that. Right. And then you have appeals over those injunctions. So, I mean, how often do we see a case that's appealed after a final trial? Those can take a long time. So these appeals in the middle of the cases still are quite significant and can be end up being permanent for all intents and purposes.
Is this stay, or the appeals court that allows the president's tariffs to stay in effect for now, is this the result of an action that the Trump administration took earlier in the day or late yesterday on their behalf?
Yeah, the Trump administration, the Justice Department filed a request for this longer lasting stay and an administrative stay, saying that it was urgent, that they needed this trade court's order to be put on hold, or the government and the Trump administration would face irreparable harm to his trade negotiations, to national security, you name it. They put a pretty urgent sounding document in there. And so that's what this decision is. It's a very brief decision. It's like one paragraph. It doesn't give a big explanation. It just puts the status quo in for now.
But the administration is also asking the U.S. Court of International Trade, that's the court that came down with the decision late yesterday, to put its own order on hold while the case is on appeal. How does that work?
So basically, the Trump administration is asking two different courts for the same thing, just to see which will give them what they want. And so a judge, in this case, a panel of judges in the Court of International Trade, could grant a stay of their own decision. That's something they could grant. They're going to consider it, and the plaintiffs in that case are going to give their view on that tomorrow by noon. They have a deadline. But meanwhile, now we've gotten this stay action from the federal circuit, so the strategy sort of paid off.
So it explains why maybe markets aren't off and running, right? Because we just don't know what the outcome of this will be. It just feels like this came out of nowhere. I think we just assumed, okay, we're now at the stage of the Trump administration negotiating with countries on what tariffs will be. And of course, the clock is ticking down to the end of that 90-day pause. But this feels like it came out of nowhere.
Well, I mean, we did write about when the cases were filed, and we covered the
Shame
hearings.
on us.
No, we did cover the hearings. But I think you're right. I don't think that people necessarily expected it to be so sweeping. I, for one, didn't actually expect it because the court yesterday could have also just issued an injunction against the tariffs while the case proceeded. That also would have been a big setback for Trump. But instead, they went for the full summary judgment, gave the plaintiffs full victory without a trial. So they really did put the hammer down. But these state attorneys general, I was just interviewing the AG of Oregon earlier today, had a call with him because his state led the case.
Yeah.
And he said that he's confident that the states are going to prevail at the Supreme Court regardless of what happens. I spoke with him before the stay was issued, but he's confident.
Well, what's his argument exactly?
His argument is that the Supreme Court doesn't want to give this kind of power to a sitting president. And he gave me a really interesting scenario. He said, what if the next president is a Democrat and declares that there's a national emergency with gun violence and uses that to put massive tariffs on guns and sort of makes it impossible for anyone to purchase a firearm? Now, the government is arguing that a president's use of this emergency power cannot be reviewed by the courts, and that in theory, only Congress would be able to overrule them by actually, legislating against such a move, which would be potentially difficult. So I think that the AG is like, you don't want to give this power to a president because then they'll just be able to declare an emergency over anything and hit anyone they want with any tariffs they want.
I mean, I think it's fair to say that this is about, again, we're in an era where I think we're defining or perhaps redefining presidential power. And we've seen it not only just on the Republican side or with President Trump, but we've seen increasingly presidents, including President Obama, using executive orders, right? And kind of bypassing congressional action. So it does feel like it's a bigger case potentially about kind of where is the line when it comes to presidential power.
And one that could hit Americans in their pocketbooks, of course, for pretty sweeping.
All right, so what's the next date? Okay, so this is going on. So I'm curious, what's next? What clock is ticking on what next legal action?
So in the trade
and which court?
Right. So in the trade court that issued this sweeping decision yesterday, the state AGs and the small businesses that sued have until tomorrow at noon to file their argument for why there should be no stay pending appeal. And meanwhile, in the actual appeals court for the federal circuit, this order that just came down gave the plaintiffs a June 9th deadline to respond to the request for a longer lasting stay pending appeal. So we're still sort of on these two tracks.
Given the sources that you're talking to on the side of the Democratic AGs and the states who are suing over this, or who are, I guess it's fair to say suing? Is that right?
They filed a federal lawsuit.
What's their next step after this?
Well, I think that it really is all about this brief that they have to file tomorrow with the trade court, and also now this other one with the federal circuit, to argue why this decision, this sweeping, unanimous decision by this conservative-leaning court should be locked in place while this case proceeds. So it's really going to come down to what kind of arguments they make, perhaps like the ones I was just laying out from the Oregon Attorney General. They need to make the case that who is going to be harmed irreparably, to use another legal term. Trump says he's going to be harmed irreparably, and the states say they will, because it comes down to money. And Americans are going to be starting to pay more, sometimes already paying more.
Right.
And the states say that their own budgets are in turmoil because of the massive amounts of purchasing that they have to do they have too much uncertainty around their budgets, how much things are going to cost, basic things for infrastructure and things like that.
Like, I can only imagine countries around the world are saying, like, whoa, wait a minute. Like, do we need to keep talking? Like, what? So I am just curious kind of what happens. All right, we're talking with Bloomberg News U.S. legal reporter Eric Larson right here in our Bloomberg Interactive Broker studio. Hey, folks, we have about 18 minutes ago. We do want to get another update on the trade for you today and some of your top business stories. For that, let's head on over to Charlie Pellet.
Indeed, higher across the board. Let's recap and reset here. A federal appeals court, as we have been reporting, has temporarily paused a ruling against President Trump's global tariffs while considering a longer-lasting hold on the decision. Keep it locked into Bloomberg Radio for the very latest on this developing story. And, of course, balance of power, 5 o'clock Wall Street time. They'll be covering all of this. We have got the Dow, the S&P, NASDAQ advancing now. Just about 19 minutes to go ahead of the closing bell, with the S&P up 15, up 0.3%. The Dow up 81 points, now higher by 0.2%. NASDAQ up 52. That is a gain of 0.3%. The Bloomberg Mag 7 Index up 0.5%. NVIDIA, one of the 7 stocks that makes up the index, up now by 3% after earnings. 10-year, 4.42%, with the 2-year, 3.94%. Spot gold up $28 the ounce, 33.15, up 0.9%. A retreat for West Texas Intermediate crude down 1.5% right now. WTI currently trading 64.18 a barrel. And Bitcoin right now with a $105,000 handle. Bitcoin falling by 1.4%. Bitcoin $105,800 on Bitcoin. We are on earnings watch. Lots of big names coming up after the close of trading. Among those names, Costco, Dell, Marvell, and also Zscaler, the security software firm. Recapping stocks higher. S&P up 16, up by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just to remind everybody, if you're just joining us here on Bloomberg Business Week Daily, our top story here on this Thursday, a federal appeals court temporarily pausing that ruling against President Trump's global tariffs while weighing a longer-lasting hold on the sweeping decision, with the administration vowing to take the matter to the U.S. Supreme Court if necessary. It's something we've been talking with our own Eric Larson about.
You know, as Eric was speaking to us, we were hearing from White House Senior Counselor for Trade and Manufacturing, Peter Navarro. He was outside the White House speaking to reporters. He said the administration, quote, fully expected a favorable ruling on tariffs. He also said that he got calls from countries this morning and talks are continuing. He said the court told us to go do it another way. And finally, Carol, he said he will hear in the next day or two from the U.S. Trade Representative.
All right, it's a fluid story.
Or we will hear rather from the U.S. Trade Representative, Jameson Greer.
All right, so we're going to be keeping on top of this. We want to continue the conversation. Still with us is Bloomberg News U.S. legal reporter Eric Larson right here in our Bloomberg Interactive Brokers studio. Joining the conversation is Jimmy Gourlay. He's professor of law, founder and director of Exoneration Justice Clinic, concurrent professor of political sciences is at Notre Dame Law School, joining us on the phone. Jimmy, we've been talking with our Eric Larson, who has been covering this for us, especially as the news has been developing. What's your take on this latest legal action, the appeals court allowing the Trump tariffs to stay in effect at least for now?
Well, it's a very fluid and dynamic situation, you know, to say the least. With respect to the original ruling yesterday by the Federal Court of International Trade, my sense is that the court got it right, because the Trump administration has based the tariffs on something called the International Emergency Economic Powers Act, or IEPA. And when I worked at the Treasury Department as Undersecretary for Enforcement, one of the offices that I was responsible for overseeing is the Office of Foreign Assets Control, or OFAC. And OFAC is responsible for supervising and implementing the government's economic sanctions programs based on IEPA. And so I'm very familiar with the IEPA statute and what it permits. And there's nothing in the IEPA statute that authorizes the use of tariffs under the statute. And you know, the statute basically authorizes or gives the president some very broad sweeping powers to impose economic sanctions. But again, at the same time, in order to trigger the use of those economic sanctions, the president must declare a national emergency, and this national emergency must involve an unusual and extraordinary threat to the national security, foreign policy, or the economy of the United States that originates in whole or in substantial part outside the United States. And so here, I think there's two issues. One is, is there in fact such a unusual and extraordinary threat to national security, foreign policy, or the economy of the United States? What is the nature of that threat? Is the nature of that threat a trade deficit? Does a trade deficit constitute an unusual or extraordinary threat to the U.S. economy? Here, I think the lower court concluded no, that a trade deficit doesn't rise to this level of an unusual or extraordinary threat. In the case of Canada, I think the threat was different. And I think that the claim was that Canada wasn't doing an adequate job of protecting its borders, supervising its borders, and as a result, fentanyl was coming into the United States. But here, I believe that the amount of fentanyl, percentage-wise, is coming from Canada is a very minuscule number, maybe 1%. And so again, it kind of strains credulity to think that constitutes an unusual or extraordinary threat that would justify the use of these.
I want to jump in because I think Peter Navarro of the White House weighed in on that a little bit and called it an emergency in a different way. That what he said, and these were not his words exactly, but the gist of what he said this morning to our surveillance team was, it's an emergency here in the United States because it's affecting the working age population here. And U.S. workers are dying as a result. So it's an economic emergency. Is that a legal argument?
No, I think you've got to focus, on the target. And here, the target of the tariffs, that we just focus on Canada and the fentanyl crisis. Here is Canada responsible for this? Is the fentanyl is coming across the Canadian border, does it rise to the level of unusual and extraordinary threat to the national security? So it's not just that it kills Americans. I mean, that's not the test. The test is, does it affect national security? Does it constitute an unusual and extraordinary threat to U.S. national security?
Yeah, I actually have a quick question, if you don't mind. You mentioned earlier that the International Emergency Economic Powers Act doesn't even mention tariffs, and of course that was one of the arguments that was used in court. Given that, why was Trump even trying to use, or is he still trying to use this law to issue tariffs when it's not even wasn't even envisioned by Congress?
I think it's a misuse of the statute. I think it's probably a very that the Trump administration is interpreting the statute quite broadly, and that if there is such a threat to national security, the economy, or foreign policy, that the president can implement any type of economic sanctions. I think it's a very broad reading of the statute, but the statute is very specific. I mean, it does indicate, for example, the blocking and freezing of assets, preventing financial transactions. And so it's very explicit. And with respect to the language of the statute, tariffs is not included in the text.
Okay.
All right, so appreciate it. Ongoing, and I'm sure there'll be more headlines on it. Our thanks to Jimmy Gourlay, professor of law and founder director of the Exoneration Justice Clinic, also concurrent professor of political science at Notre Dame Law School, and of course, who we lean on, Eric Larson, Bloomberg News U.S. legal reporter, for the ins and outs of all of this and coming what's next. Eric, thank you so much as well. Appreciate it.
Once again, the story we're covering is that a federal appeals court offered President Donald Trump a temporary reprieve from a ruling threatening to throw out the bulk of his sweeping tariff agenda. It offers at least some hope to a White House now facing substantial new restrictions on its effort to rewrite the global trading order.
All right, everybody, you are listening and watching Bloomberg Business Daily, and this is Bloomberg.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, Carol, as Carol Master says.
Yeah, we're
9 minutes to go. Is that right?
Yeah.
Can I do math?
Yeah, no.
Can I? I'm asking you.
You can do
Okay,
math.
I can do math.
I can.
I can.
Tim can do math. We're bouncing around. Seen a little bit of an uptick in equities near our highs when it comes to the Dow Jones Industrial Average. If what you really care about is the S&P and the NASDAQ 100, we're definitely off our best levels, but also off our worst levels, and we're green across the screen here.
We are. I want to bring in Dan Morgan, Senior Trust Portfolio Manager with Synovus Trust. Synovus has about $19.3 billion in assets under management. Dan joins us once again from Atlanta. We love checking in with Dan pretty much quarterly. Oftentimes it has to do on the eve or the day after a chips company like NVIDIA reports, semiconductor stock, because it's a market that he follows closely. NVIDIA shares right now higher by about 3.2%. They did rally as much as 6.4% earlier in the session. Dan, I'm curious, you've had close to 24 hours to mull over these numbers. What's your big takeaway from NVIDIA?
Well, hello, Tim. Hello, Carol. It's nice to be back on the show.
Great to have you.
Yeah, thanks. It was a very messy report, which I'm sure you guys reported yesterday when the numbers hit. A couple things that I got from it that I didn't hear a lot of people talking about. Obviously, data center segment growth was up 73%. It was a little bit off what the street was looking for, but still a very strong number. But we look at both gaming and the networking segments. Those two segments beat estimates by over $1 billion. So huge beats in segments not directly tied to what everybody focuses on, right? Which is the data center area in terms of, that segment. But we did see great strength, especially in networking. We hear a lot about NVIDIA during the investor conference calls talking about, well, what's going to hold this data center together? What's going to hold the chip in? What's going to hold the server together? And you've got to have this type of equipment. So I thought that was very interesting that they beat by such huge margins in both gaming and networking.
Do you like the NVIDIA story? Would you say it's a buy? Would you say it's a hold? Would you say, I don't know?
Carol, we've been in NVIDIA since like 2018, 2019.
Right.
And I think you and I have been covering the stock for like 5 years on the radio show. So
pretty amazing.
Yeah, I mean,
our toddler is growing up. Our toddler is growing up, Dan.
Exactly.
But
I mean, let's put it this way, Carol. When we first started talking about it, I can remember when the gaming revenues exceeded the revenues coming from their data center segment.
Well, of course. I mean, that's the company's DNA.
Right. So, I mean, on every metric that we could look at this thing, 35 times price to book. The SOX is like 4.5, 5 times book. You look at the trailing PE, it's, plus 40. You look at the forward PE based on fiscal year 26 earnings, they're at about 25 times earnings. So you all get kind of scared because of the lofty multiples. But I still feel there's still a lot of really good things down the road, even despite the H20 issues in China and the bans with this rollout of the new Blackwell chip. And I still expect, tremendous growth going forward in their dominant position that they have right now, in that AI chip space. So no change, Carol. I think I've been pretty bullish on this stock every time I've come on and talked to you and Tim for at least the last, 4 or 5 years. Nothing's changed.
Yeah, no, it's interesting, right? It's funny because we actually talked to one bear this week who's got the lone
Jay
sell.
Goldberg.
And so just curious if anybody is kind of pulling back, but it sounds like you're not.
Yeah, Dan, one thing that has changed, though, is the U.S. relationship with China. And that's especially when it comes to NVIDIA. We spent a lot of time yesterday and today talking about that. How did you view the concerns about China that the company raised and that we've also been seeing as a result of restrictions placed by the Trump administration on the export of certain chips?
Yeah, so this, is very interesting because if you listen to the comments that came out from the CEO of NVIDIA, he's like, well, we're looking at sales in China to completely dry up, right? Because you banned our H20 chip. Now, there's a possibility, as you've probably reported, that they will bring out a diluted Blackwell chip that will meet the specifications that will be allowable to go in that market. But one thing that's kind of interesting, Tim and Carol, it's like, is this the best way to go, right? You've basically eliminated NVIDIA's ability to participate in, let's say, a $50 billion AI chip market in China. So who's going to make up for it? Well, it's going to be Huawei. It's going to be other China-based chip companies that maybe they have an inferior chip, but they're now going to be the only game in town. So is this really the best thing going forward for everybody? You know what I mean? You know, NVIDIA, shareholders, China. The only thing I can think of, guys, where they could potentially make it up is, as you know, President Trump was over in the Middle East a couple of weeks ago and signed an agreement with Saudi Arabia. That followed up with a partnership that NVIDIA announced to deliver about 18,000 GPU chips to an organization there. So do we take off the emphasis from China and all of a sudden do other markets, other sovereign entities that could buy these type of AI chips start to open up in the Middle East? We'll just have to see.
All right, we're going to leave it there. Listen. Oh, would help if I turn my mic on. I need some coffee or something. Sorry, Dan. It's just been a long week, another long day. I am so glad, though, we had some time to get you back into the fold and look forward to doing it more and more frequently.
Can I just ask him? We have 10 seconds. We have 10 seconds.
This is
I'm sorry.
your show, too. You can do whatever you
Marvell
want.
and Dell after the bell. What do we need to watch for?
Oh, good question.
Okay, in 10 seconds. All right, so Dell, I think the focus is going to be on server growth. That's area that's been driven by the build out of the data centers. And then in Marvell, obviously, it's going to be all about the data center. We're looking for 76% growth coming out of that. Should be a good follow through from the 73% growth we saw on NVIDIA. So looking for good numbers out of Dell and Marvell.
Cool stuff. As always, Dan Morgan, Senior Trust Portfolio Manager with Synovus Trust, $19.3 billion in AUM, and joining us from Atlanta. All right, Dan, be well, be well. Hey, folks, do not go anywhere. We've just got about 2.5 minutes to go until we wrap up the trade. We've got a bunch of earnings coming your way, including Dell, Gap, Marvell. Do not go anywhere. Closing bell starts right now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell with a global simulcast that starts right now. Scarlett Fu in the TV studio, Carol Massler, Tim Stenovic, they're in the radio booth as we welcome our audiences across all of our platforms, including our partnership with YouTube, Carol Massler, on a day where it looked like we're going to have a pretty strong rally, strong earnings out of NVIDIA.
Right.
We had what looked like maybe temporarily a reprieve on tariffs, but some of those gains obviously being given back as we get closer to the bell.
Yeah, right? Some data on the U.S. economy, that the economy shrank at the start of the year. We saw weaker consumer spending. There's some different things going on. And then we've got some questions about the president's global tariffs. A court saying, kind of ruling against them, and then the Trump administration coming back and saying, well, wait a minute, they're still in effect. There's going to be some legal action, but again, another level of uncertainty layered on here.
Sometimes I think it feels like you need a law degree to follow what's happening when it comes to what the different courts are saying at this point. That said, I think it's fair to say that traders didn't necessarily buy the reprieve because of the way that we saw futures fade late yesterday and into the trade today, given that we didn't have any new news. I mean, we went into the trade today thinking, well, look what NVIDIA did yesterday. That'll give some juice to the trade today. And also look what the court did. And you saw late yesterday that stocks were higher in some cases by more than 1.5%. That just didn't hold.
Anything that goes to the courts, I feel like investors just need to price in that this will take months, if not longer, for us to get any kind of resolution. So you don't really have any new catalyst. You just have, let's continue to move forward with the uncertainty that we have grown accustomed to.
Some decent gains today out of names like NVIDIA, out of names like Chevron, but that's being countered by some significant drops in names like Netflix and Salesforce. The net effect of it all here are fractional gains for the market here on this Thursday afternoon. The Dow Jones Industrial Average closing higher by more than 100 points, or about 0.3%. The S&P 500 up about 24 points, or 0.4%. A similar percentage move higher for the NASDAQ Composite, and the Russell 2000 adding about 7 points, or 0.3%.
All right, folks, to the S&P 500. You've got still, though, most names in the average higher, 355 to the upside, Scarlett, 144 to the downside.
And we kind of have a reversal from yesterday in that you look at the IMAP and pretty much everything is green. Real estate investment trusts up by 0.9%. Healthcare, utilities, each gaining about 0.7%. Those are more defensive sectors. The weak link is communication services, losing about 1/3 of 1%. Industrials and consumer discretionary also laggards here in that they've gained the least.
All right, quick check on some of the gainers. NVIDIA on that list. It was a top gainer on both the S&P and the NASDAQ 100, up about 3.25%, well off its highs intraday of about 6.5% to the upside. We broke those earnings yesterday. You guys know the story, but we got some NetApp earnings crossing as well.
Yeah, let's take a look here at NetApp crossing the wire right now. The company saying that for its fiscal fourth quarter, adjusted EPS did beat $1.93 versus street estimates of $1.90. Revenue relatively in line with estimates at $1.73 billion. And here's your forecast going forward here for the company. The company says that it sees 2026 adjusted EPS in a range of $7.60 to $7.90. The street on average looking for $7.71. Net revenue guidance, $6.63 billion to $6.88 billion. Not quite sure what that compares to with regards to street estimates here, but no real movement, at least initially here in the shares.
All right, we'll keep an eye on that one. I mentioned NVIDIA, of course. They eased concerns about China, upbeat sales forecast. So again, that went up 3.25%. Elf Beauty off and running, up 33% at its highs today, folks. Finishing the day with about a 23.6% gain. Elf agreeing to acquire Hailey Bieber's beauty brand Rhode for about $1 billion. So again, some enthusiasm in a big way in that one. And then United.
Did Justin Bieber weigh in on that?
No, apparently she celebrated, but by herself last night. This is according to the New York Post.
Oh, no.
Yeah, but this is, thank you. You're welcome. Yeah, this is the Post action.
She's one of those modern women, Romaine. She actually owns this business, does it probably on her own. Doesn't need the hubby to weigh in. Just saying. Oh, quiet. All right, United Airlines up 1.4%. United and JetBlue Airways agreeing to a partnership that will essentially allow travelers to use loyalty points and book flights across both carriers. I don't know.
I love it when Carol doesn't get pop culture.
What do you mean I don't get pop culture?
Tim, you got anything?
What did I miss?
I thought, no idea. I'm not going anywhere with this.
Wait, do you have a Bieber comment?
I got nothing. There was a lot of Wikipedia when trying to understand this stuff.
I've actually used Rode. Have you guys? I bet Alex, Scarlett, you guys have used Rode, right?
I haven't. No,
don't know anything about it.
I hate wearing foundation except when I'm at work because we wear so much foundation, and I'm really into the Lady Gaga foundation line right now.
Oh, okay. Well, it's a lot of skincare, actually.
Yes,
My daughter actually got me into it.
Oh, interesting. Okay.
Yeah, I don't know. But anyway.
Yeah, okay, I'm going to go with...
Hey, speaking of skincare, we are expected to get Ulta Beauty earnings anytime now.
There we go.
After the bell. Yeah.
A good segue. Before we get Ulta's results, let's talk a little about some of the stocks in the red today. Synopsys down 1.6%. Remember, yesterday fell by 9.7%. The company did come out and suspend its financial guidance for the current quarter and fiscal year after it got a letter from the U.S. Commerce Department's Bureau of Industry and Security about new restrictions on exports to China. The new curbs are part of the Trump administration's efforts to restrict the sale of chip design software to China, citing national security concerns, once again down by 1.6%. Uber shares ended up falling by close to 5%, 4.6% or 4.5% to the downside. This as the CEO of Tesla, Elon Musk, confirmed that in recent days, the EV maker has been testing self-driving cars on public streets in Austin. Ostensibly, it would hurt a company such as Uber if people were hailing vehicles from Tesla rather than hailing Ubers. But remember, Uber does have partnerships with many ride-hailing companies, or self-driving car companies rather, including Waymo, in certain markets. They've also been developing their AV strategy, their autonomous vehicle strategy. And years ago, they were working on their own stuff, but then they ended up kind of closing or selling off that unit many years ago. HPQ, HP Inc., the worst performer in the S&P 500 on a percentage basis today, down 8%. Shares fell as much as 13% earlier in the session. The company issued a weak profit outlook. It cut its annual earnings forecast. It cited a weaker economy and also the impact of U.S. tariffs against China. Alex.
All right, taking a look at the bond market here. It was a little uneventful. You saw buying pretty much across the curve. We did get the mixed economic data in the morning, but also then you had President Trump telling Fed Chair Jay Powell, you're doing the wrong thing. You got to cut rates at the end of the day, and you're seeing the market moving on that 2-year down by about 4 basis points, guys.
Yeah, he's been very consistent on that message. All right, let's tell you about the latest earnings from Dell Technologies, of course, making servers, AI servers in particular. In terms of the first quarter, total net revenue of $23.3 billion, higher than what was anticipated, which was $23.15 billion. Adjusted EPS for the quarter, that was $1.55, trailing the consensus estimate of $1.69. As for this quarter, it sees revenue of anywhere from $28.5 to $29.5 billion. Analysts were looking for $25.4 billion, so that is a beat on the second quarter revenue outlook. It also says its AI server backlog has grown to $14.4 billion. Analysts were looking for a number in the neighborhood of $7.9 billion, so that is much better than expected. You can see the shares surging right now, up 10% in after-hours trade right now.
All right, from one stock that's up in the aftermarket, 9.5% higher in Dell, to another one, Ulta Beauty. We've seen this stock also move higher. This after the company sees fiscal year EPS of $22.65 a share to $23.20. Previous estimate that the company had seen was $22.50 to $22.90. Also sees fiscal year operating margin of 11.7 to 11.8%. That pretty much meshes with what the street's expecting of 11.8%. Fiscal year comp sales 0 to 1.5%. Had seen 0 to 1%. The estimate on the street is below 1%. So again, you're looking at that stock up about 3.4%. Just a quick check on the first quarter that just happened. Comp sales 2.9%, way above the street estimate of 0.31%. And first quarter net sales 2.85 billion versus the estimate of 2.79 billion. Street estimate for first quarter estimates 580, and this company easily blew that away, 670 shares. So again, that stock up almost 4% here in the aftermarket.
All right, Zscaler, the cybersecurity software company, beating on the top and the bottom line in its fiscal third quarter, 84 cents on the EPS side. Revenue coming in at $678 million. It's also guiding higher for both its fiscal fourth quarter and full year, saying that for the fourth quarter, adjusted EPS will be in a range of 79 to 80 cents a share, a tight range. The street was looking for 70 cents a share, and for the full year, the company says revenue will be in the range of roughly about $2.66 billion. It had seen about 2.64, so a slight increase there in that guidance. We should also point out they are announcing a change in CFO, saying that Kevin Rubin has been announced as the new Chief Financial Officer.
All right, taking a look at Marvell Technology, that stock down by about 5%. Adjusted earnings came in better, and the net revenue estimate also came in better, coming in at $1.9 billion. The shadier part, the grayer area, I should say, is second quarter outlook. So their net revenue is in line with expectations at $2 billion, but plus or minus 5%, very similar to second quarter earnings coming in at 67 cents, plus or minus 5 cents. So giving that wider band, they also have an investor event coming up on June 17th. So of course, looking forward to more AI and what that winds up meaning for the company.
Hey, before you just move on to that, I just want to mention Ambarella also, which of course is in the same space as Marvell. Those shares higher as well, up about 5% on the back of their earnings report that just came out here, a beat on several key metrics.
I'm going to the restaurant industry because shares of Red Robin Gourmet Burger are shooting higher right now, up as much as 25% in the after hours. It's a micro cap, $55 million market cap. The company came out with results that said first quarter adjusted earnings per share did beat estimates. It's a turnaround story right now. The CEO, just in about a month at this point, says still there's a lot of work to be done.
All right, just real quickly, Marvell down almost 5%. Dell is up about 6.2%.
You know, when I first started at Bloomberg, I was staying out somewhere way out in Jersey.
Go on.
And the only restaurant was a Red Robin. I ate there every day.
What did you order?
A burger every day.
And was it good?
Yes, it was actually.
I wonder if, but I do wonder, seriously, I mean, in the press release, they talk about going back to what this brand is known for and rebuilding the brand.
Yeah, just simple stuff. That's what you want, a good meal at a decent price. That's it.
That's what they say their value proposition is.
Yeah.
All right, are we done?
We're done.
Okay, good. All right, that's a wrap. Across platform, radio, TV,
Are you sure, Alex?
Bloomberg Originals. Whew, I feel sorry for you guys. All right, that's a wrap. Across platform. We're going to continue. We're over here on radio, you guys on TV. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, earnings season is not done, as we know, and we even have more earnings coming next week. I think it's fair to say that investors are dealing with a lot right now when it comes to this market. Just to try to keep up when it comes to trade, the latest is a federal appeals court has temporarily blocked a ruling that threatened to throw out the bulk of President Donald Trump's tariff agenda. It offers some hope to the White House. That's just one of the issues that investors are facing. Watching all of this and what it means for investors is Dr. David Kelly, Chief Global Strategist and Head of Global Market Insight Strategy Team at JP Morgan Asset Management. The whole firm has about $3.6 trillion in assets under management. David joins us here in the Bloomberg Interactive Brokers studio. I was kind of joking that you needed a law degree to understand the back and forth with the different courts in the last 24 hours that we've heard from. But one thing that I think has become clear is that it didn't seem like investors or traders actually bought the idea of some sort of reprieve from these tariffs. We saw initially with futures last night shoot way higher when this decision came out, or when this ruling came out, but then that faded and it didn't even get much of a reprieve early in the morning.
Well, and I think that makes sense. I mean, first of all, investors are just suffering from incredible tariff whiplash. I mean, it's we have somebody on my team whose job it is every day to try and figure out the effective average tariff rate that the United States is deploying on or imposing on everybody else. And Mary Park does a good job, but she's the hardest working person on my team, and just trying to keep up with
So
that.
what do you guys see? Because our Bloomberg economics team is basically roughly 13-ish% is what they're saying.
That's where we're ending up to, and of course that assumes the same. You don't allow for a change in the volumes of trade, and we know the volume of trade will be impacted by this. But it is, and I think that's the important point, because where were we at the start of the year? We were about 2.5%, and now we're at 13%. And so yes, the market didn't bounce off of the idea that maybe this all gets blocked. But even if it did get blocked, I mean, why should we be up year to date? I mean, if you think about the economy we came into this year with, we had a good economy, right? But we also had a lot of optimism after the election. And since then, we've had sort of the DOGE cuts. We've had all this controversy around immigration. We've had a budget proposal which looks like it's going to expand the deficit in 2026, 2027. And most of all, we've got all these tariffs which are throwing sand in the gears of global trade, and all the uncertainty that's coming from all of this. And all of that is still weighing on the market. So the market should not be higher than it was at the start of the year. And I think maybe if if we don't bounce off every little piece of relief, it's because, this picture overall is still pretty uncertain.
Right. Uncertainty still rules. You know what I think about? And David, you got a PhD and an MA in economics from Michigan State University, a BA in economics from University College Dublin in the Republic of Ireland. I studied economics. I keep thinking about the cross-section of economics and markets, and I'm wondering if the global economy is still as intertwined as it was, or are we kind of opening up a new chapter on that?
I think I think other countries are more dependent upon global trade than we are. The United States only imports about 15% of its GDP. It exports about 11%. If you go to places like the Eurozone or the UK or Japan, those numbers are much, much higher. So what happens in the United States is actually mostly about the United States. But still, these tariffs do push up prices, and they do slow our exports, and they do add uncertainty, particularly for global U.S. companies, because even though the U.S. economy is pretty domestic, a lot of these companies are not that domestic, and it's difficult for all of them.
A couple truths about our economy. One is it's powered by consumers, and it's powered by services. Given that the average tariff rate is really 5x since the beginning of the year, what does that do to consumers?
It punches them, but it doesn't fell them. I mean, it's definitely a negative, but we have the most resilient consumers in the world. I mean, unless you melt the plastic, they will keep on spending. And I think we've seen that. I mean, even in the first quarter, with all this going on, consumer spending was rising. I think it's going to rise again in the second quarter. Not that fast, but consumers try to put on the headphones and ignore it, and so we're still seeing that. So I think that's one of the big advantages of the U.S. And of course, we have had huge gains in wealth in the last few years. People can spend some of that. I think people try to just drown out the noise coming out of Washington as much as possible.
But help me out, because often when we see debt levels, consumer debt levels go up, and then we're looking at whether the ability of consumers to actually pay it. I mean, we get concerned, we get worried, because there is a point where, right, your debt becomes potentially for a household problematic, or that debt is so much and mortgage rates are still higher than they were, that like people don't do these kinds of things.
It's a drag on the economy, but it's not fatal. The thing about debt, of course, is the rate at which you finance it.
Correct.
And 2/3 of U.S. household debt is mortgages, and those mortgages got locked in at 3-point-something% a few years ago. Now that is a huge problem for people trying to buy a house right now, because that mortgage is not available and it's not going to be available.
Right.
But it also means that the actual debt service ratio, the percentage of disposable income that people are using to service their debt, is way down from where it was before the great financial crisis, and it's still not that high. So, people talk about credit card debt, but credit card debt is actually a pretty small part of overall consumer debt. So overall, we're seeing, yes, there is some strain from increased credit card debt, slow increase in delinquencies, but it's nothing like before the great financial crisis.
We're going to get payrolls next week for the month of May. I'm curious about the view that you have when it comes to hard data, and if we're going to start to see cracks appear in hard data. We haven't seen that yet.
Well, we'll see a little. We saw a pretty ugly unemployment claims number this morning. 240,000 was a little high, and the number on continuing claims, over 1.9 million, was also a little high. But I think we're still at the early stages of this. One of the things that helps the American economy, makes it resilient, is consumers, of course. The other thing that's really helping right now is businesses don't want to lay workers off because it was so hard to hire them. You go back to March of 2022, we had 12 million job openings, and gradually they filled the positions, and they still don't have all the people they want. And so until they see the whites of the eyes of recession, they don't want to fire them. And I think that is holding down layoffs. Now, what we don't know is what it's doing to hiring. Because we do think that there's a bit of a hiring freeze or a hiring slowdown going on, and the question is how fast does that feed in to the numbers? But that's an unanswered question. So
right, labor hoarding real, right? But it doesn't mean companies are inclined to hire more people.
And it's very important, because what people don't realize is just how dynamic the labor market is. If you look at that job openings and labor turnover report, in the United States, we hire about 65 million people in a year. About 62 million people leave a job for a 3 million job gain. But 65 million, that is 250,000 people fill out a new W-4 form every single day. If you just pull back on that just a little bit, we're going to pause, then suddenly you've got an employment problem. And that's what I think the next two jobs reports will tell us.
We will be watching. David Kelly, Chief Global Strategist, head of the Global Market Insight Strategy team over at JP Morgan Asset Management, right here in studio. You're listening and watching Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Earnings after the bell, lots of them. Costco posting better than expected earnings in the third quarter, a sign that the nation's largest club chain is flexing its scale and following to navigate tariffs and other forces of economic turbulence. Right now, after hours, we do have Costco up by 0.9%. Dell shares surging now by 5% after the bell. Dell gave a profit outlook for the year that exceeded estimates and said it had seen a significant increase in orders for servers to run AI networks. Again, after hours, we've got Dell up by 5%. We'll have a whole lot more on earnings coming up in just a moment. Briefly, Zscaler boosting its adjusted earnings per share guidance for the full year, and Ulta Beauty's first quarter results top Wall Street estimates. It turned out today to be an update for the Dow, the S&P, and NASDAQ. Lots of moving parts to today's trading. Tariffs and appeals, with the S&P up 23.59.12, a gain there of 0.4%. The Dow up 117, up 0.3%. NASDAQ up 75, a gain of 0.4%. 10-year 4.42%, the 2-year 3.94%. Spot gold up 0.9%. A down day for crude. West Texas Intermediate crude down 1.5%, $60.91 a barrel. Bitcoin, by the way, 106,121. Bitcoin today down by 1.1%. Again, a whole lot more on earnings, specifically retail, coming up. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Shares at Costco, they were higher in the after hours. Now they're down just fractionally. The company posted better than expected earnings in the quarter, a sign that the nation's largest club chain is flexing its scale and devoted following to navigate tariffs and other forces of economic turbulence. Devoted followers, there's like Reddit's dedicated to... You know, my sister had a Costco-themed birthday party, Carol?
That's kind of funny.
Like,
I don't even know how you do that.
She
what do you
loves
do?
Costco.
Yeah. Stocks up 10% this year. As you said, the little change here in the aftermarket. Gap also out, posting better than expected quarterly results, driven by strong performances from Old Navy and Gap brands. But as Tim mentioned, this stock is plummeting in the aftermarket. It's down about 15%. The outlook from the company sees second quarter net sales about flat year over year, sees fiscal year net tariff impact up to $150 million in operating income, and still seeing fiscal year net sales of about 1% to 2%. But the outlook, they say, does not reflect potential tariff impact. So I guess it could be worse than expected. Bert Flickinger is managing director for the retail consulting firm Strategic Resource Group. He joins us from New York. Bert, so great to be talking with you. It's been a while, a long time. Let's talk about Costco, first of all. What do you make of their results? Stock, as we said, bouncing around in the aftermarket. And right now I'm looking at, it's pretty much flat.
Carol and Tim, two things. As you referenced, Costco's hitting on all cylinders, doing well. Every country, every continent, every market. But what's particularly impressive, on top of their 5.7 comparable sales and 8.8% revenue growth, is they have the whole world to conquer. They've got twice as many stores in Taiwan, 14, as they have in the People's Republic of China. It's the same analysis we did for the acquisition of Tiffany, where Costco, like Tiffany, is really understored in the major markets. And Costco's wiping the floor with Sam's Club, as it always has for 40-plus years. And Costco's benefiting from bankruptcies, has great leadership, great prices. And we're writing a book, The Explosive Growth of Private Label, Eclipsing National Brands, and Costco has the best private label business anywhere in the world.
Kirkland Signature, I believe, is what it's called, Bert. Why has Costco been able to do so much better than Sam's Club? Or maybe a better question is, why can't Sam's do what Costco has done?
The big reason, Tim, and it's a great point you brought up, and I love your sister having a Costco-themed birthday party, too. Very impressive. Sam Walton was never really that successful with his brother Bud. They failed in Bud's closeout stores. They failed in Dot's discount drugstores. They stole all their good ideas, including from Price Costco, and promised never to compete with Solid Bob Price and Jim Senegal, and they lied and they did. And they did the same thing with the Davis family with Winn-Dixie on the board, said they never go into the food retail. Did. Same thing with John Schwegman and Schwegman's. So Walmart's a copycat, but since they're not real operators and practitioners, they don't know the detail of retail and the rhythm of retail. So why is that important? Costco does $250 million in sales per store. And Tim, and for your sister and Carol, and for all your great Bloomberg listeners and viewers worldwide, the average Costco is the equivalent of 25 Albertsons stores, and 70% of what Costco sells is consumable food. So whether it's your sister or whomever worldwide, she or he could get everything one needs, from hard goods, soft goods, consumer electronics, general merch, pharmacy, to the cheap hot dogs in the lobby, to food, and not have to go anywhere else. So Costco is replacing shopping malls and shopping centers and the Roman empires of retail worldwide, because Costco is a shopping center unto itself and raising the standards of living when 70% of consumers are living paycheck to paycheck, and Costco's prices are 20 to 30% below anybody else, with the exception of Aldi, Trader Joe's, and a couple others like Winco.
Kind of love that. And just in terms of, we're all about size and scope, or that. And so you really put it into perspective. What, Tim?
I asked the question, he gave the answer. Like, that is the answer. I love it.
No, it says so much. I mean, the one thing I'm curious about, Bert, when it comes to Costco, we used to say, okay, it's kind of a higher end customer. Is that still the case?
Still the case. And what's interesting, Carol, and to your and Tim's present questions on Walmart's grown through acquisitions and failed in 10 foreign countries, from Japan, Korea, Brazil, Argentina, throughout Asia, throughout sub-Saharan Africa, throughout Europe. And Costco has not grown through acquisitions. So the Socratic question we have to ask ourselves, Tim and Carol, is what can Walmart do? What can Costco do to grow through acquisitions? They can buy Metro, which is the 4th largest retail, all wholesale clubs worldwide. Full disclosure, bought SM Flickinger Company. And Metro with Costco would pole vault Costco and Metro to the biggest retailer anywhere in the world. And our client Pack and Save in NZ or New Zealand, Costco only has one store. Pack and Save is translatable to throughout the Asia Pac region and other regions. So Costco buys potentially Pack and Save, or more certainly Metro, and you have a worldwide powerhouse. And think Walmart's in trouble now with Sam's Club and Walmart. Walmart's in total trouble if Costco makes any acquisition.
But Walmart, I'm going to ask a long question, Bert, so we can work on your connection a little bit. It was breaking up just at the end. I do want to specifically talk about Walmart, because last week what we were saying is basically, hey, they're in a much better position than Target is in, because more than 50% of what they offer are consumables, so they're not discretionary. Whereas Target,
food?
Yeah, I'm talking about food. So where I'm talking, Target, that's a lot of discretionary spend, and Target has its own set of issues that we talked about last week. But Walmart is able to rely on groceries to help sort of, I guess, blunt the effect of maybe a weakening consumer and some of the tariff issues that it's facing. I thought Walmart was in a pretty good position, Bert.
Tim and Carol, you're completely correct, but Walmart wins in North America and loses worldwide, and that's going to change. And Walmart on the consumable side, yes, they're doing well. Target is not a Brian Cornell leadership issue. It traces to the problems passed along by John Stumpf, the lead independent director of the board, Greg Steinhoffel, and Bob Ulrich, for failing to invest CapEx in Target food distribution centers. So Walmart has 130 food distribution centers. Target has less than 10. Kroger and Albertsons combined had 60. Kroger basically 40. So Target, with no food distribution centers to distribute food, has to go to an outside wholesaler, which lowers quality, raises prices. Brian Cornell's working decisively to take corrective action on that. So Target, while it's trading at a 10 PE on the Bloomberg terminal, Target can have a real retail requiem. Walmart has had a retail renaissance in North America, but it's like Charles Dickens wrote in Tale of Two Cities. It's the best of times and it's the worst of times, Tim and Carol.
Yeah.
And it's the best of times for Walmart in North America, and it's the worst of times for Walmart internationally. For Costco, it's the best of times everywhere worldwide.
Love it, love it. Hey, one thing I want to ask you, not such a great time for the Gap. It's down 18%, Bert, here in the aftermarket. And this is after the company came out, reported weakness at its Banana Republic brands, its Athleta brands. They did rise at Old Navy and Gap. Revenue of $3.5 billion in the fiscal first quarter. And the company's saying it's working to reestablish Banana Republic and reset Athleta with efforts to improve product and marketing, which will take some time. Where is Gap? Where does it need to be? What role could it have, should it have in the retail world?
Carol, Gap's a rudderless retailer, and here's why. Horrible executive search. So you take executive leaders who have failed with other companies, and after they've failed elsewhere, you bring them into Gap to incorporate it to fail more. And I was offered the head of executive search for one of the leading executive search firms in the world for retail, consumer, and distribution. And I was told, Flickinger, you'd go spend months finding the best person. Yes, you don't do that. You just take whomever's available. Well, whomever's available are the people who got fired for failing. It said, well, if you do that, you'll get killed by all the other competitive search firms. They said, who do you think we learned it for? You just take people who failed and replace them. That's the story of Gap, Tim and Carol. But it's poor leadership, where Costco is homegrown,
I just want to.
Leaders.
But when Gap, I think, hired Richard Dixon, who was formerly of Mattel, who was seen as reviving, I think, the Barbie brand, I think it was seen as a good hire. So you're saying not a good hire?
Not a good hire, because it's like taking Sandy Douglas from Coca-Cola and putting him into UNFI Super Value. You have somebody who's managed a few hundred SKUs or selling units, and you give that person selling tens of thousands of units.
Yeah,
it can't compute. And these search firm people, Carol and Tim, they have no experience as operators, no experience as practitioners, no experience as leaders, no experience as big complex business developers, especially worldwide, especially across a depth and range of brands that require understanding the rhythm of retail and the depth and detail of retail as well.
Can I get you 25 seconds on Ulta, which is soaring in the aftermarket? The stock is right now up about 8%. This is following earnings, and beauty demand bucking the consumer pullback at 25 seconds.
A powerhouse, and continues to be a powerhouse. Great leadership, great quality, great consumer cachet, great marketing, and great consumer communication. Outstanding company.
All right, so fun to check in with you. Covered a lot of ground in the retail space and all that earnings after the closing bell. Bert Flickinger, looking forward to next time already. He is managing director for the retail consulting firm Strategic Resource Group. As you see, a lot of size and scope and perspective when it comes to the retail environment. He's seen a lot of cycles.
Hey, coming up next, Bank of England Governor Andrew Bailey with a fireside chat. That's next.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up day for the Dow, the S&P, NASDAQ. Choppy session, but a day that ended in the green nonetheless. Traders were cheering solid results from NVIDIA. NVIDIA shares today up 3.2%, but they also had to face the harsh reality of slowing economic data and all of those rapidly moving legal uncertainties around Donald Trump's trade war. S&P today up 23, a gain of 0.4%. The Dow up 117, up 0.3. NASDAQ up 75. That was a gain of 0.4%. 10-year 4.42%. The 2-year 3.93%. Gold 33.16 the ounce, up by 0.9%. Crude down 1.5%. 60.96 a barrel. David Kelly is Chief Global Strategist and the head of the Global Market Insight Strategy Team for JP Morgan Asset Management. He was a guest right here on Bloomberg Business Week Daily, and he told us don't be surprised by the S&P 500 index being little changed a year to date. He also talked about tariffs and what it does to consumers.
It punches them, but it doesn't fell them. I mean, it's definitely a negative, but we have the most resilient consumers in the world. I mean, unless you melt the plastic, they will keep on spending. And I think we've seen that. I mean, even in the first quarter, with all this going on, consumer spending was rising. I think it's going to rise again in the second quarter.
David Kelly of JP Morgan Asset Management. Briefly, earnings news after the bell. We heard from Dell. Dell shares trading higher now by roughly 5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. A lot of earnings in the after hours still, Carol.
Yeah, absolutely. On a day where we kind of bounced around in general, as Charlie just broke down some of the closing numbers, but a lot of earnings. I'm Carol Masser, along with Tim Stanovic. Let's take a look at some stocks on the move today. Joining us right now is Jess Manton, Bloomberg News Deputy Team Leader for U.S. Equities. Stocks you're watching, a lot of it had to do with those earnings after the close
and
today,
especially
Jess.
On the back of NVIDIA's report after the bell yesterday. So I wanted to highlight Dell. The ticker symbol is DELL here. And so looking at that in after hours trading up about 4%. So this is a big move because it is a leading provider of computers and servers for AI. And it actually, that stock had soared nearly 60% through today's close since its lows in early April. So it had been on a tear after stumbling earlier this year too. So when you're looking at that stock, it's important because it still is off actually about 36 to 37% from its most recent high back actually a year ago. It was last May. So if you're looking at this, of course, actually a lot of it has to do is that analysts were anticipating that some of its guidance would potentially come in weak here, but some of those numbers, not surprisingly, came in better than expected. So its annual profit outlook topped estimates on that server demand. So that's why you're seeing some of that actually rising there too. And then especially on the back of what we're expecting with the AI story and then NVIDIA as well. Of course, every report when it comes to NVIDIA is a blockbuster report, but specifically to Dell, CoreWeave is actually a cloud computing company that we've covered very closely when it comes to the most recent IPOs here, as well as Elon Musk's xAI. Those are both customers of Dell's hardware for their AI infrastructure build out. So the potential here that this is better than expected actually really helps those customers. And especially when you're thinking about NVIDIA, the top 4 customers, whether it's Amazon, Alphabet, Meta, as well as Microsoft. So some of these customers tied to AI, and especially when it comes to those providers like Dell, it's still doing better than expected here in the back of that concern about AI spending slowing down.
Okay, that's Dell. What about Costco?
So COST, not surprisingly, the ticker symbol on this. So that one-day implied move was expected to be actually around 9%. If you're looking at this stock too, it's actually flat, only up about 0.3%. If you're looking at this now, and then also its stock is off more than 35% off of its all-time high last touch. Also, not too long ago as well. But also, if you're looking at this, it's important because the retailer generated earnings per share about $4.28. So it's above Wall Street analysts' expectations, but it also suggests that Costco is growing its business even more here. And then it has, if you're thinking about Costco relative to some of its competitors, because it does have, in some ways, it has been a little bit more immune to some economic volatilities because customers pay a fee to shop at its network that had more than 800 stores. So the SKU is a little bit more affluent than some of its competitors here. But that actually fared better than expected. So especially in the wake of when you're thinking about Target, as well as Procter & Gamble, Kraft Heinz, some of those consumer packaged good companies, those have been the ones, and it's particularly Walmart, but the consumer packaged good companies when you're thinking about, and Jen Partashis at Bloomberg Intelligence has talked a lot about this,
especially over the last 6 months when you're thinking about those promotions. If you're at the grocery store trying to figure out, buy one, get one 50% off because of those issues they've been dealing with volumes, especially in the aftermath of coming out of COVID and dealing with those inventories. That's something that you're starting to see still be more of an issue for consumer packaged good companies and not as much so when you're thinking about some of those big box retailers.
Just looking at some of the write-through on Costco, about a third of their U.S. sales come from goods imported from other countries. And so the company has been diversifying its sourcing. Execs in recent months noting that they're working to minimize the impact of levies on consumers. You just talked about some of this.
I'm trying to think of what I get at Costco that comes from another country.
I don't know, Mr. Kirkland.
Do you have a Costco membership?
I do have a Costco membership, yeah. We actually live really close to a Costco.
Oh, do you really?
Yes, but here's the thing.
I don't have a Costco near me.
It is too crowded to actually step foot into on a weekend.
I believe that.
Do they have it online?
They do.
They do.
The problem is that it's very expensive.
Oh.
Like, it still ends up being cheaper than, when you're buying in bulk, but it's like, the prices don't even compare to when you go and get it yourself.
So they charge you more for the online experience?
I don't think it's them specifically. I think it's Instacart or whoever it is.
Oh, I got it. You got to go through there.
There's an upcharge, yeah.
So they don't have an online?
They do, but they partner with Instacart.
Oh, okay.
Yeah.
All right. Sorry, we digress.
So we do Costco. Like, I'd say we do it. We have a membership, but we do it every 6 months, and we do a huge order.
Yeah. I mean, I always think about Lisa Mateo on Surveillance every morning. Yeah. And if there's a Costco store, or she talks about heading into the weekend, it's going to be a 2-cart weekend.
That's
and
right.
It's really kind of
getting
fun.
stuff for her kids too.
Maybe I should go to New Jersey to do Costco. I'm telling you, the Brooklyn Costco is way too crowded.
That's what you should probably do. I mean, there's not one near me. Don't look for me to go shopping.
I was going to say,
hey, Master, while you're at Costco.
What about a Red Robin Gourmet Burger?
Yes,
because shares are surging.
Now, this is a company, its market cap is less than $1 billion, but wanted to point it out.
This is a $55 million market cap company. It's way less than $1 billion.
Right.
It's less than $56 million.
Don't we call that a micro cap?
Right. So actually, it definitely is a micro cap type of stock. I'm pointing it out because in after-hours trading, RRGB is the ticker symbol, up about 56% in after-hours trading here. So there's a big move, of course, even though it has a smaller market cap. So those adjusted earnings swung to a profit, and its revenue did rise as well.
Is it up 55% here in the
yes,
aftermarket?
That's why I wanted to bring that one up.
Just said it's a $3 stock.
Right.
So it doesn't.
$3 stock.
This company's in the midst of a turnaround. I mean, the company's CEO, David Pace, he's only been there for a month at this point. He said, "We're pleased with our strong start to the year as we delivered increases in both sales and profits during the first quarter." He also said, though, "Nevertheless, we are far from claiming victory. There's still more work to be done as we continue the comeback journey of this beloved brand and capture the significant opportunity in front of us."
That's right. Its last all-time high was touched in August of 2015. It looks like here, looking at that max drawdown function in the terminal. So it's down about almost 100% since that last all-time high. So to Carol's point, this stock just trading above $3 a share.
I've had their towering onion rings going back a few years. Like when my daughter was younger, it was a good place to take like a kid, and probably towering onion rings with perhaps a little cocktail. Some kind of fun drink off the menu, you know?
I've never been to one, but now I kind of want to go after Carol Master was just
Are you sure you're talking about a Red Robin?
Yeah.
Oh, okay.
I know. You're like, is this the woman who had escargot last night?
Yeah, that's what I'm wondering.
I am a diversified kind of gal. I'm just going to say, sometimes you got to have a towering onion or a bloomin' onion. Have you ever had a bloomin' onion?
I think in college we had a bloomin' onion.
It's kind of yummy. Yeah. I've backed off of fried stuff. That's all I'm going to say.
What about French fries? Are you still doing French fries?
I am.
Okay.
I feel like I should back off.
Count.
We'll be in an airport, and Tim is always hungry. She's like, I'll see you at the gate, because he's running for food. And he's such a sweet guy. He's like, hey, you want some fries?
I always get her fries.
He'll always buy me fries because I love them.
The key to Carol Master.
Yeah.
For more conversations like this, I should say a big thank you to Jess Menton, Bloomberg News Deputy Team Leader for U.S. Equities. For more conversations like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
All right, folks, we are headed for a break, monitoring any more earnings news that might come, but I think we're pretty much through it. We'll watch for some news, some of those calls that the companies that reported, including Dell and others. There were calls with analysts and investors. We'll bring you any headlines. You're listening and watching Bloomberg Business Week Daily. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. Let's get right now to Dublin, where our own Francine Lacroix is sitting down with Bank of England Governor Andrew Bailey. It's a fireside chat. It's part of the Irish Association of Investment Managers annual dinner. They just got started.
Most of the difference is to do with productivity and to do with investment. And, you know, you look at the job we have with monetary policy, which is balancing supply and demand. You look at, obviously, the job that, you know, fiscal policy has. It is harder to run macroeconomic policy when you've got a lower growth rate. I mean, history tells us this. So raising the potential growth rate is critical. And I say the UK is not alone in this respect.
How much more necessary is it because of the trade war also that we're seeing? I mean,
well, I think it underlines the importance of it. Because the trade situation will, you know, if the world economy fragments, that will also have an impact on growth. You know, the point I made, I mean, it impacts on, you know, things like knowledge transfer, it impacts on supply chains, so it will have an effect, yes.
Is the world fragmenting for real, or are these just jitters that then will settle?
Well, I hope we can get, you know, past the sort of, you know, disruption we're going through. And it's why, as I said in my remarks, I do think it's critically important that, you know, that we focus on ensuring that what I call the multilateral system is, you know, is rebuilt and is robust. And I, you know, I include the World Trade Organization, I include the IMF, because they are absolutely important, fundamental sort of, you know, parts of the system.
But does the current, I guess, trade turmoil make it more necessary for the UK and EU to get together? 100%.
Well, I think it does emphasise the need to do it, yeah, because it puts all of us in a situation where we've got another risk to activity in the economy. So I think, you know, doing everything we can to rebuild that relationship in this situation. But of course, we also don't, by the way, look, we don't want to lose the relationship with the US. I mean, we really want to get to the issues that are underlying this and help to solve them. It's not something we want to sort of wish away.
Is there more uncertainty because of the trade turmoil than there was after Brexit?
Oh, that's a hard thing. I think, look, post-Brexit, I mean, there was no question what the decision was. The uncertainty was, of course, around how it was going to be put into effect. And that went on for quite, you know, you think about it, that went on for quite a long time. I think the challenge we have at the moment is that we don't actually know what the outcome is here. I mean, this is one of the problems we have in, you know, obviously in monetary policy is, you know, I would say when we take our decisions on interest rates, you have to sort of stop the music, as it were, and say, okay, we'll take this read of what's going on, what's going on in the economy and in the world economy, and then apply it into our monetary policy decision. But obviously, when I say that, however, you're making decisions on a forward basis because monetary policy has its effect looking forward. So then you've got the challenge, as we had, you know, 3 weeks ago. What exactly is going to be the end point of all of this? I mean, you know, if we'd been having this conversation 24 hours ago, we might have had a different, you know, we'd have a different facts around us for the moment. So that, you know, that introduces, you know, we're sort of classic as central banks in talking about uncertainty constantly. We've also introduced the word unpredictability because I think that's a slightly different thing.
I mean, I know investment managers, you know, in Europe or really around the world are again trying to figure out the turmoil. I think someone's come up with the term the taco trade, which is Trump always chickens out when it comes to imposing really tariffs, getting like a slightly nervous laugh. But how, you know, if you're thinking, because I know you think about trade wars, like how should investment managers think about the trade wars? Like what do we know, what do we not know? At every decision, how do you look at it? How do you look at probability?
Well, I think there's a number of things that we have to think about. Well, let me take one in the real economy and then we'll come on to markets maybe. Yeah. I think the one in the real economy that we have to think about is if there is a negative effect on activity, is it going to be a demand effect?
You're listening to Bloomberg's Francine Lacroix with Bank of England Governor Andrew Bailey from Dublin.
With COVID and Ukraine, there's a problem of having, you know, repeated supply side shocks going on. I mean, I think it's quite interesting when I observe quite a lot of the commentators, and this tends to happen, that they immediately assume that it's a demand shock. And obviously that for monetary policy, if you stop there, as it were, then you think, well, that's actually negative for inflation. But of course, if it actually turns out, and this does, you know, happen, that there is a supply shock element to it, and if that's, say on supply chains, and if that turned out to be persistent, then that would not, the effect on inflation would be quite different. Now, reading that is very hard at the moment, so we have to keep coming back to that. It's why we keep using, as you know, we keep using these terms, gradual and careful in the approach. On markets, I think, the issue is that I think is this: we've seen very big changes in what I call the sort of structure of core financial markets in in the last 5 years, 10 years. Big shift from the sort of, traditional sort of bank dealer model to a non-bank model. And before any of this happened, we were already, spending a lot of time saying, well, what is the sort of pattern of, what shocks can happen, and how would they sort of push through and go through that system? And of course, it's even more acute now in terms of understanding, where the fragilities are in a world of volatile markets with that structure of bond markets, for instance. So it's a thing we spend a lot of time on.
But how close have markets come to this financial doom loop spiral, similar to what happened in the LDI crisis?
Well, the good news is that I don't think, we didn't get near to that point. And by the way, I think that's important for a number of reasons. One is that it does, suggest, and this is where I do somewhat push back on the sort of the deregulation agenda, which is not because I think our rules and regulations are all perfect. They're not.
All right, everybody, you are listening to our Francine Lacqua with the Bank of England Governor Andrew Bailey, a fireside chat there from Dublin. If you want to continue listening to the conversation, just head on over to Live Go on the Bloomberg Terminal. That's going to do it for Tim and me. Have a good and safe evening. Tim's out tomorrow. We'll see him next week. Balance of Power starts now.